which continues to be the top gainer today. Gains of nearly 4% coming in there. SBI, BEL, in fact, the defense pack, 4 consecutive session of gains coming in with defense majors. Maruti, Kotak Mahindra Bank, Trent, Hero Motor. Again, it's more of consumption, which is on the uptick, and it can be from the auto pack or FMCG. Tata Steel is under pressure, HDFC Life, SBI Life, and Bajaj Finserv. So something to do with insurance and financials is slightly down. Hindalco again 0.9% lower. ITC also seeing a very different trend as compared to the other players. If you talk about India VIX as well, that's pretty much at 10, receded by almost 0.9%. So that number of around 10 is pretty encouraging. There you go. A very steady chart in terms of the way India VIX has panned out during the day. Let's quickly look at the advanced decline ratio as well. From morning to now, if you see the chart, pretty much steady. The advances were somewhere close to that 1800, 1900. It's come down slightly, and you've moved towards that 1400, 1500 kind of advances. And from a declines perspective, that has actually increased. You started off the day at around 300. That's nearly become 3 times now. So that chart is also slightly narrowing right now. So that's the trend that you're looking at. But what's encouraging is the outperformance that's coming in from the small cap index, Mahima. And it's a lot of stock-specific action that you've been witnessing. No clear trends, but textiles, defense, your PSU pack, all of them firing.
Right. But, Hiral, what you were mentioning about the, advanced decline ratio, I think that is telling us a picture as to how mid-cap 150 is not performing very well. And that narrowing of chart is indicating as to the kind of downtick that we're seeing in the mid-cap 150. It's up around 0.09% as we speak, 0.08% as we speak. But yes, as Hiral mentioned, small cap 250 is outperforming, seeing gains of about 0.5% and very stock specific. There's counters like Red Tape, India Pesticides, DCM, Shriram, Wellspun Enterprises, Garden Reach, KNR Construction, Lux Industries, etc. doing very well in trade today. On the flip side, counters like Dream Folks, on account of the closure of their domestic lounge services, locked in the lower circuit, down by about 5%. Fiam Industries, Westlife Food is seeing profit booking today, 2.5% down in trade. CSB Bank, Godfrey Phillips also seeing profit booking today, down by about 2%. Sirma, SGS, Time Technoplast, NLC India, etc. On the flip side, are seeing the downtick in trade today. So that's about very stock specific market, of course, and with regards to how the broader end of the spectrum is looking like. But with that, well, let's also welcome in our guest for the day, Kush Bora, founder of kushbora.com, joining us now. Kush, hi, good afternoon to you. Hiral was mentioning that analysts are suggesting that if we close about that 25 to 50 levels, the momentum will sustain. Do you think that's possible today as well?
Sure. Hi, Mahima. First, a very good afternoon to you and to all the viewers. Well, if Hiral said it, how can I deny it, right? No, but that's on a lighter note. But yes, she's right on the fact that 25,250 was a key resistance zone on the Nifty. In fact, I did mention that yesterday, a couple of sessions ago as well. Right now, a couple of heartening signs. Let's start with the positives first. Good uptrend. If you see out of the last 11 odd sessions, we've ended higher on about 10 of them. Today also included, assuming we close in the green. So that's on a very strong footing. 22,250 resistance that is being taken out. PCR, despite the kind of moves that we've seen in the recent past, up moves, it still sits at a comfortable 1.23, close to overheated, but not there yet. And the most heartening fact is that the put base keeps shifting higher practically every day. And now the heaviest put base is at 25,300. Which is suggesting some sort of comfort that the bulls have in terms of writing put options at very near-term levels as well. So those are the positives. Mild caution, if I could put it out there, is the smaller time frame charts, which are now actually seeing overheated territories. So if you see Nifty and Bank Nifty as well, for that matter, on the hourly charts, they've actually gone into overheated territories, suggesting some profit booking could be par for the course. Lots of positives, minor caution. So I would suggest if you have a position, not a bad idea to continue to hold. But if you wanted to initiate a fresh one, it will be a good idea to buy it on declines. So maybe closer to 25,200 or thereabouts, a 150 point dip perhaps from here would be a good entry point on the Nifty. I think the star of the show remains Bank Nifty, 11th consecutive session of gains today, assuming, of course, we close in the positive, but, going great guns. Now coming up to the resistance of the 55,500 zone, the 50 DMA. So maybe some profit booking here also advisable. Buy on dips is the strategy. 54, 800, 55,000. If you do get it around those levels, that would be a good entry point on Bank Nifty as well.
Okay, that's interesting in terms of the gains that we've seen. Buy on dips should be the strategy. Kush, a quick view in terms of your top picks. And in addition to that, if you can just highlight what one should do with the PSU banking space, because that is what is also firing today.
Oh, absolutely, Hiral. If you'll recall, this is exactly the discussion that I had. In fact, I think Mahima will also recall that, on Ask Profit, when we were asked about a couple of banking names, my suggestion was rather than buying likes of Kotak and Axis, I mean, you're better off buying PSU banks like SBI, PNB, which had started to, see short covering bouts about 10 sessions ago and could gain momentum. And we are seeing a continuation of that. And, and a perfect example of that today as well. Now they're coming close to slightly overrated territories, although the volumes that have happened yesterday and today on some of these names are encouraging. But I would suggest that if you did buy them at lower levels, book partially, continue to hold the rest, don't let go, because the rally might could just well be starting. So that's the view on PSU banks. As far as picks go, both of them on the long side. Incidentally, one of them is from the banking space. That is the Indian bank stock that I'm referring to. Just 5 sessions ago, on the 12th of this month, we discussed Indian Bank as a buy call with targets of 712 and 730. The first target has been hit today. The stock's actually at all-time high levels and gaining ground. Volumes also very healthy today. So if you have a position, continue to hold up the targets to 730 and 745 now. And the initiation price of 695 becomes your stop loss. And if you did buy it, it becomes a trailing stop loss. The other one is GVTND, GE Vernova TND. About to have a rounding bottom formation breakout, but with the kind of moves that it's made over the last 3 days on the back of good volumes, taking support of the 20-day moving average, this one also is a buy. Near-term targets 3,000, 3,075, 2850 is where you place that stop loss.
Okay, so that's with regards to where the PSU pack goes and the topics coming in from Kush. But let's quickly pull up Vedanta on the screens and see what a Vedanta is doing in trade, because the stock has nosedived as we speak. And this is on the back of the hearing that was in the Mumbai High Court, which has been deferred right now. And this is the demerger hearing, not having much details on the same yet, but the stock is at the day's lowest levels with cuts of 2.5% coming in there. It's interesting to see what's happening on this one, because the demerger talks, Mahima, have been ongoing for quite some time. And overall, if you talk about the timelines as well, the last update was that the NCLT had actually deferred this hearing to the 17th of September. This was done at the end of August 2025. Okay. And now the hearing is again deferred to the 8th of October. And that's the latest update that we're picking up so far. The pressure continues in terms of where the stock goes. Kush, a quick one. What would you advise investors to do with a Vedanta?
Stay out for now. Off late, the stock has actually seen far higher degree of volatility. Although if I were to cut some slack, for the stock, most of the metal names today, you look at the likes of Hindalco, Tata Steel, JSW Steel. After a good run, a lot of them are already seeing pressures and cuts of about 1.5%. This one on the back of the news that you said slightly deeper. So my suggestion would be avoid this. If you still want to stick to the metal pack, JSW Steel and Tata Steel are the preferred ones. So stick to those names. Right now, the profit booking is underway. So maybe at slightly lower levels, you could consider JSW Steel and Tata Steel. Avoid Vedanta for now.
We also have Parag Thakkar of For Capital joining us now. Parag bhai, very good afternoon to you. Hiral was just mentioning as to the timelines of this Vedanta demerger, and this is the third time that the hearing is deferred. The last update that we had was on, the NCLT saying that NCLT ordered rejecting the demerger of TSPL and post cases for the hearing on 4th of August. But since then, we are hearing only deferment of the cases. Your view with regards to how investors should react right now to this?
Sorry, I think I will not be able to give you a view on Vedanta because we don't hold it in our portfolio.
No worries. Parag bhai, your view on PSU banks. We've seen a stunning rally in all of these counters. Your preferred pick there?
So basically, as we have discussed earlier, SBI, PNB and BOB are the PSU banks which we hold in the portfolio. We remain constructive. In fact, our channel check suggests that this quarter, PSU banks might surprise with a very, very minimal NIM compression. Decent growth, and as usual, asset quality will hold on very strong. So although there is a good rally which has happened last 5-6 days and it is continuing today, so we are not chasing it today, to be very frank. but we would like to hold on because we see a long-term structural rally in PSU banks. And just to add to that, even in as I had highlighted in my last interview, that up till now, after the GST cut, only auto sector and auto component sector had seen a massive run. And now the market it was high time that market should shift to second order thinking, which is financials. And within financials, I also remain extremely positive structurally from long-term perspective on HDFC Bank, which is our very large holding, because of the fact that now that CD ratio is below 96%, market is flushed with liquidity with CRR cuts. HDFC Bank is best positioned to gain after the GST cut led demand surge, which will happen after 22nd September. HDFC Bank is present in every nook and corner of the country. They have a huge number of branches in tier 2, tier 3 towns and rural areas also, and in all auto dealerships. So I would say that HDFC Bank is all set to grow at industry rate in FY26 and above industry rate in FY27. Stock is just trading at 15 PE on FY27 and only 2 times price to book, which is historical low. And now all the problems of CD ratio being high, liquidity being too tight in the system, deposits not coming to the bank, to all the banks, I would say. All those problems are behind, and now the big positive turnaround is in the making.
So Parag bhai, would you say HDFC Bank would be your top pick in terms of where the private banks go?
Absolutely. HDFC Bank is
we'll revisit the banks again, but it's time for a quick segment where we have the stock of the day, which is MCX. In fact, the commodity exchange, if you see the stock chart, has made some smart moves after SEBI chief Tuin Kanta Pandey hinted at allowing banks FPI in commodity trade. Varsha is here with more on that. Varsha, over to you.
Well, thank you so much for that. So yes, SEBI is actually widening the participation when it comes to commodities market, and that's the reason, you know, SEBI chairman said that they are considering to allow banks, FPIs and pension funds to, you know, trade commodities. Now, this will lead to a good higher liquidity and higher volumes, and MCX would be the, will actually support this MCX long-term growth. Now, you know, talking about what does existing regulations say, banks and pension funds are not allowed as of now, you know, to participate in commodities market. When it comes to FPIs, they are restricted to cash settled non-agriculture derivatives only. When it comes to mutual fund, they are allowed, but they do have limitations when it comes to their specific investment. And you know, now these are the current existing rules that we have. Now, what does the new regulation mean for banks? They'll be able to hedge their commodity loan portfolios. You know, when it comes to pension funds, they can actually diversify for risk management, and this opens a new asset class for them. When it comes to FPIs, they'll be allowed to trade in physical settled contracts. And now, considering how this will benefit exchanges as a whole, as I said, there will be more volumes, there will be more transactions and good liquidity, and more volumes will actually you know, attract new products. There will be new product launches as well, and this will actually improve liquidity, and so there is a vicious cycle you know, when it comes to these transactions. Lastly, how MCX will benefit. So the current contribution from these segments is negligible, as I said, because they are not allowed. But overall, if you see, FPIs contribute almost 7% to the overall turnover when it comes to MCX. But MCX will benefit because considering the 90% market share that the MCX has. And so this is the reason, because of SEBI is considering the widening you know, participation when it comes to commodities market, MCX is actually gaining when it comes to trade today.
Thanks, Varsha, for that. In fact, with the MCX, Mahima, from a CDSL, BSE, all of them are seeing a good run, and the capital market play probably is the one which is gaining traction over the last couple of trading sessions as well.
And probably that is on the expectations that markets from here on will just see momentum and low downfall, and hopefully that is what we see going forward as well. But Kush, quickly, your view on the charts for MCX?
Not so encouraging. MCX has been on my short call, in a short candidate list for some time now. We did initiate a call. The stock has underperformed for some time now. If the team could just pull up a 3-month chart of MCX, you know, you'll very clearly see that the peaks actually make, yeah, there you go, fabulous. You know, you can very clearly, without even a a proper technical indicator, you could see a falling trend line resistance. The 8,000 mark is proving to be a bit of a stiff resistance. The high today also around the 8,035 mark, and then profit booking from there suggests that near-term pressures could prevail. Call option right up also at that 8,000 level. If, however, in the coming days, if it is able to close above that 8,000 mark, I won't be surprised to see a spring up to another 3 to 5% move. So 8,250, 8,450 could be on the cards, but don't preempt that. There has been some selling pressure on MCX. Wait for a convincing close above the 8,000 level, and then perhaps you could initiate a trade. Not now.
Okay, that's regards to MCX. Parag bhai, how are you looking at the capital market play and the commentary that we've been hearing from SEBI chairperson with regards to expanding, the pool when it comes to investments in commodities, and to increasing the compliance as well? Would you be a buyer?
No, basically, I will not chase the momentum at this moment. Of course, if the banks are allowed to trade in commodities through this MCX and other exchanges, it is a big positive because that will increase the volumes. And it's a great business to be in, but the stock has also rallied a lot. And as Kush said, that this is not a right time to chase the momentum. And of course, all capital market stocks will do well definitely when market outlook is good, right? And market outlook has improved after the communication between US and India has improved. And of course, which should have improved significantly after GST cut, which it has. So I would say that I am not a big believer of capital market stocks anyways. So I'll not chase the momentum.
Parag, you were talking about HDFC Bank, and there was a Jefferies note also that had come in today with a target price of 1,200. They're also saying the same thing, right? Asset quality is stable, it's improving, loan growth guidance also stays. To take your point ahead further, what makes you constructive or bullish on that particular counter, HDFC Bank?
See, I'll tell you one good thing about HDFC Bank is that they've always maintained top class asset quality across the cycle. If you see 2007-8 cycle of where many other banks and financials lended to power plants without coal and lended to many other real estate players, and all actually became NPAs. So across the cycle, they have kept away themselves from any euphoria, and they have not chased high-yielding loans at the cost of asset quality. That is the DNA of the bank, which I love the most. The bank had I would say last 2 years of a little bit of tough time because when they wanted deposits, there was a tightening and there was a liquidity deficit in the system. Now all those things have faded away. Now they have a CD ratio which is under control, which is below 96%, and banking system is flush with funds due to CRR cuts, which are rightly done by the RBI. So I would say the stage is set, and I'm not saying from Q2 perspective. Please be aware, and I would like to say to all your viewers also, this is a long-term structural high-quality bet at a very, very reasonable valuation, and stock has not done anything great in the last 3-4 years because of these issues, which were actually not created by them. Actually, when the merger was done, they had to bring down CD ratio from 110%, so they are not growing. And liquidity was also absolutely tight. So now that CD ratio is in favor, liquidity is good, GST has been cut. So from Q3 onwards, I see them firing on all cylinders with top class asset quality. And valuations are very, very compelling. Where do you see PEG of 1 in the market? HDFC Bank right now, next year EPS is around 57 rupees.
Correct.
And if you reduce the subsidiary value, it's trading at exact 15 times. It can grow at 13-14% from next year.
Understood.
So PEG of 1.
So I think a compelling bet coming in for a HDFC Bank. Very quickly, how are you seeing a SBI if you have to pick a HDFC versus a SBI?
So I have both. I like both. From near-term perspective, definitely there are more triggers in SBI. See, today they got this 8,800 crore from Yes Bank stake sale. They have already raised 25,000 crore from QIP. Their margins will be more resilient this time. The growth will be more. They have got huge value in their subsidiaries. So it's a large weight for us. And I would say that it continues to be. But after such a massive rally, as you know, I am not a buyer in this kind of momentum. While HDFC Bank has not shown any momentum. And I am seeing, because the Q2 might be the last quarter of slow growth plus some margin contraction. So people are staying away from it. So that is where I will buy today.
Right.
And from Q3, I feel HDFC Bank will start performing in a big way.
Okay. All right. The other pack of stocks that is in focus is the textile companies. Now, PM Narendra Modi lays foundation stone of Mitra Park in Madhya Pradesh. Textile companies have remained focused on the back of that, and we're seeing gains in a lot of these counters that will be participating in the event. And Jasmeet is joining us to give us all those details as to why is this important for textile companies. Jasmeet, what are you picking up?
Well, right, yes, thank you for that. Now, as you rightly said, this PM Mitra Park is a proposal of 23,000 crores and spread across 91 odd companies. Initially, 114 companies, but now we have 91 companies contributing towards it. We also have a couple of major listed players of textile who have contributed the land and the money for this particular project. Now, if you see Vardhaman Textile, they have invested 2,000 crores for a land worth 190 acres. And on the other hand, we have Trident, which has invested 4,800 crores for a land worth 180 acres. Now, what is this park and how will this benefit textile industry in large? While this park would help textile industry to go and modernize their techniques and reach global level, given the recent tariff impact, they would want to invest and push textile to reach major countries so that the entire risk is diluted. Now, well, this will also help them create major jobs. So the initial direct jobs are 1 lakh per park, while if you look at indirect jobs, they will give employment to 2 lakh plus people going forward. Now, if you look at the other set of news, and which would help you understand why the textile stocks are in focus, well, this comes in after the India-US have started their negotiation for trade tariff again. Now, initially after the 50% tariff, they had impacted majorly textile stocks, given that major textile players import a lot of the items to US. And 50% tariff, they would again get strangled by the competition and would not be able to proceed as prior. So that's the reason why the stocks are buzzing, given the negotiation talks are in progress. So it's something to watch out for how the negotiation turns out and how these stocks get focused in again.
Lots of news and lots of buzz around textile companies as well from here on. In fact, Kush, any charts that tell you where you would see further momentum from here on and which could be buy recommendations?
So two stocks stand out. A lot of them have done well in the last 15 odd sessions, but two stocks that stand out even today. One of them is Wellspun Living. Good moves on this one, very healthy volumes, key resistance levels of the past 5 sessions taken out. I think further upsides to about 135 and about 143 cannot be ruled out. Supports near 122 to 120 zone. So risk reward ratio still fairly favorable. And the second one is GoKex, Gokul Das Exports. Here too, very similar structure. Near-term resistance is taken out, 50-day moving average being cleared on the back of very strong volumes today. There is a gap on the upside near the 890 mark that could perhaps come into play for with the kind of run that the stock is seeing currently. So that will be your target. And on the downside, you can keep a stop loss near the 790 mark. So here too, fairly favorable risk-reward ratio. So Gokul Das Exports and Wellspun Living, these two stand out. A couple of other names also, but they're seeing resistances. So we perhaps skip that discussion for now.
Parag bhai, anything that you are liking in this space? Because on one side, UK FTA was positive. There is EU FTA also under negotiations, but US tariff still remains as an overhang. But India has high aims when it comes to textile exports. $100 billion is something that they're expecting by 2030. Anything in the space that you're liking?
So basically, see, I will tell you, the communication between India and US has definitely improved. And I am also hoping that this tariff is reduced as soon as possible, because that will prevent many job losses also in jewelry and textile segment. But I would say that I don't want to take such a bold call right now after a rally that, it is going to happen in a very short term. So I would like for correction. But of course, the stocks which Kush mentioned, of course, those are in my radar also, whether it is Wellspun Living or Gokul Das Exports or Vardhaman Textiles or Lakshmi Machine. These are the stocks which are under my radar and which I would like to buy on dips. But definitely after such a market nowadays moves on narratives, right? So market has taken a narrative that tariff is going to be reduced for sure. But I would like to see more clarity on it. And just to be on the safer side, right now, I would like to buy financials. Like, for example, City Union Bank is a bank which is perceived to be a textile lender or MSME lender. But our channel check suggests that there is very, very limited exposure. They are doing extremely well, 15% growth. 1.5% ROA, PE is just 10x. So I would like to bet on such names which are perceived to be, having problem, while actually there is no problem. So I would say that something like those names are, or for example, in a capital goods, as we mentioned last time, a stock like LG Equipment, which has 25% exports to US, and that stock has corrected 25-30%. Excellent quality promoter, debt-free balance sheet, high ROC business, and across the cycle delivered fantastic ROCs. And so I would like to say that I would like to buy City Union Bank or LG Equipments of the world, even if this tariff is about to reduce.
Right.
Yeah.
Right. So that's with regards to banks. But thank you, Parag bhai, so much for joining us on the show and getting your views with regards to what's happening with the banks as well. Kush, stay with us. As we slip into a short break, let's look at some key questions. What will drive the next leg of growth in India's story, and how should retail investors, plan their strategy from here on? Let's listen to the cupboard coming in from Christopher Wood, Global Head of Equity Research Strategy at Jefferies.
Are in place. The RBI has already eased a lot. I don't think the RBI needs to slash interest rates dramatically more because they've already eased policy a lot, and you don't want to undermine the currency. So I think basically the policies are in place.
Chris, we're also speaking on the occasion of Prime Minister Modi's 75th birthday. And some of the programming that we're doing today is to look at his government's policies and the impact they've had. You've been vocal about what this government has been doing and the impact of its policies. Anything you'd want to add there?
Well, no, I mean, just there's obviously been dramatic progress in India under this government. That's just obvious. So if I had to say one obvious area is the huge pickup in government capex, which has created huge improvements in infrastructure and therefore, created a much better framework for the private sector to operate in.
In terms,
I think another area I'd mention is the bankruptcy reform process, which appears, obviously it takes time, but that is a major change in India. Another major dramatic change has been the Real Estate Regulation Act, which I think creates a much more sustainable property cycle than we saw in the past. So those are three specific areas I'd mentioned. There are many more though. And obviously GST is another example.
Yeah, in fact, Chris, for a lot of people, GST 2.0 was arguably one of the biggest reforms. So one big bang reform done, RBI cutting rates as well. What else would you want, let's say over the next 12 months from the Indian policymakers?
Yeah, but when you talk to the policymakers in this third term of the Modi government, there's been a lot of talk about addressing what I've heard referred to as regulatory cholesterol, thereby improving the ease of doing business in India. So it's easy to talk like this, but clearly I think the government's extremely focused on this. And that I think is a very healthy focus. And that's something that's can't be done just by pressing a button. But everything I'm hearing makes me think this government's very much focused on this whole issue of ease of doing business, which can only really be implemented at the bottom-up level.
A decade of bold reforms, market-moving decisions, and global leadership. This 17th September, India's most transformative leader, Prime Minister Narendra Modi, turns 75. His decade of change shaped the economy, markets, and world's view of India. What do business leaders and millions of Indians say about the Modi era? Catch all about Modi at 75, India Rising. Only on NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप। The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Welcome back. You're watching India Market Close on NDTV Profit and celebrating Honorable Prime Minister Modi's 75th birth anniversary. Joining us to give his wishes and describe what this Modi era actually means for the government, for India Inc. Joining us is Dr. Arvind Panagariya, Chairman at 16th Finance Commission. Dr. Panagariya, welcome to the show and always a pleasure to speak to you. My first question coming to you is, we're talking about Honorable Prime Minister Narendra Modi's 75th birthday today, a Modi era which is in the making or already made so far 11 years that we've already spoken about. How would you describe this entire phase, and what would you have to say?
Thank you, Mahima. Really pleasure to be here on the 75th.
I'll just correct. This is Hiralia.
Okay. Hi. No, I think a great pleasure to be speaking with you on the 75th birthday of the Prime Minister. I think this is this has been quite a ride for 11 years. And India really stands very transformed. I like to describe Prime Minister Modi as a holistic Prime Minister. He's not, a few major agendas for policy or for development and so forth, but he really is holistic. He looks at everything, and this is something I kind of learned from the very beginning when my interactions with him started around in 2012 or 2013. He worries about the infrastructure, he worries about policy reform, he worries about defense, he worries about foreign policy, internal security, Northeast development, sports, you name it, roads, ports, airports, railways, digital infrastructure. It has been a remarkable 11 years of transformation. And he really started, if you remember, in his initial years in the first term with this idea of Sabka Saath, Sabka Vikas. And, 11 years later, indeed, if you look at, as an economist, one of the things I look at is what has the government done for poverty reduction. And it's quite remarkable, the numbers that you get. Poverty 2011-12 was something of the order of about 22% nationwide, using the Tendulkar poverty line, which is what we normally use.
Right.
It's now down to 3%. And there has been a reduction in poverty all around. Whether it's Hindus or Muslims or it's Christians, Sikhs, Jains, or another way, scheduled caste, scheduled tribes, OBCs, all around, I've done all the numbers because this is a subject I study very closely. And there has been massive reduction, so for the Hindus, poverty fell from 22% in 11-12 to 3% in 23-24. For Muslims, it fell from 24% to just 2%. For scheduled castes, it fell from 30% to 3%. OBCs, 21% to 2%. So, there's been all around progress. And that is what a holistic Prime Minister really does.
Yeah, and I 100% agree with you, Dr. Panagariya. Mahima also joining in. Just want to understand with regards to the recent reforms that everybody in India is talking about, that is GST 2.0, and not just that, the kind of reforms that have happened over the years under his reign. Your new IBC code, your Jan Dhan Yojana, there are PLI benefits that have come in, tax benefits, rate cuts, and so much more, right? That have had an impact on India Inc. Your view with regards to all of these reforms. And a second part of that question would be, what more, is India planning at the whole level to achieve that Viksit Bharat mark by 2047?
Right. So for the reforms that have already happened, you rightly mentioned, the GST reform, the IBC, the bankruptcy code. We also had, by the way, a major reform of the corporate profit tax. The rates were brought down from close to about 30% to 24-25%. The second GST 2.0, of course, another major reform. Don't forget the personal income tax reform, where in the last budget the exemption limit was raised to about 12 lakh rupees. There's been all around, and the impact of it can be seen in both growth and, as I mentioned to you, different poverty reduction numbers. So all that has happened. On what is to come, I think the next big thing that I am expecting is what would happen as a result of the ongoing trade negotiations. Now India is very well poised. It's already underway that it is going to be home to many of the multinationals in the way that China became in the 1990s and 2000s. The same process is underway in India currently. And so we need these free trade agreements, which are being negotiated currently, both with the United States and European Union. Some have already been done, the one with UAE, Australia, these were done earlier. But the two big ones will be the one with the United States and the other with the European Union. Those are, I think, going to be two very big reforms, in my opinion. It'll really create a marketplace without any friction, which is incredibly large. I mean, you could move goods between the United States, European Union, and India once these agreements are in place without any friction. So that is going to be a big deal, and for any of the multinationals, that would actually make India an incredibly attractive location, because India already has a very large labor force, both skilled and unskilled. So we got that resource there, and it's an open economy. But what we need now as a kind of next level is the free trade agreements with these two entities.
Okay. That is interesting. And how are you assessing India's current position in global trade? Where are you seeing the opportunities? Because all this while we were talking about China +1 as a strategy. Bilateral talks with regards to China have also started. Tariff negotiations, pretty much we are seeing some positive commentary that's coming in from both the sides, US and India. Where do you then see India fitting in now?
So I think I'm very pleased to see that, there was some bit of derailment of the negotiations, but negotiations are back on track. I mean, I'm sort of very hopeful that the agreement with the US will be concluded. And if that happens, then I think, also the agreement with the European Union will become more likely. So those are the two, and that really places India incredibly favorably, pretty much in a situation in which China was around early 2000s, because we got the massive workforce, as I said, both skilled labor force as well as less skilled. So we can really cover whole spectrum of industries, labor intensive, starting from apparel and footwear all the way up to the most capital intensive industries, aircraft and machinery and pharmaceuticals and whatnot. So I think the market will enlarge, and this is what will give us the big kind of jump, both in trade and in growth.
Okay. And my last question coming to you is the roadmap to 2047. What is the kind of growth that is needed to achieve that outcome that Prime Minister Modi has so far? And from here on, what is it that will lead to the 2047 kind of agenda?
Yeah. So, the reforms that we've been talking about, we also need perhaps some reforms in the labor markets and some reforms in the land markets. In India, land tends to be rather expensive, urban land in particular, which is where the industry locates itself. So I think the states are doing, some Andhra Pradesh, Uttar Pradesh, some of these large states, Telangana, Gujarat. So they've been doing, but we need a little bit more on land side, so that land becomes a little less expensive for the business enterprises, and some labor market reforms as well. But I think if we do all that, and some bit of deregulation will be required, which is on the radar screen of the government. The government has appointed these committees which are looking into what can be done. So we'll be well on our way. The kind of growth we will need, we'll need about, in dollar terms, in real dollars, we'll need a growth rate of about somewhere between 7.5% and 8%. But this is something that we have done. If you look at our history from 2003-04 to 2017-18, we easily did more than 9% growth in real dollars during that period. So all we need to do really is the next 2 decades, if we repeat what we have done during this period of just until before COVID. COVID, we declined a little bit, but we still did about 7.5% in real dollars. So we are pretty close. We have done the kind of growth that is required over the next 2 decades. So it is most certainly well within our reach. It's not something, that we have not done in the past. We have done it in the last 2 decades.
Absolutely. Growth, something which is achievable, reforms on the radar as well. Thank you, Dr. Panagariya, for joining us on the show. And it was a pleasure to speak to you as well on NDTV Profit. But moving on, staying with one of the reforms, we are talking about GST 2.0 right now, where the policy or the mandate was the GST rate cuts are coming, and this has to be for the benefit of the consumers. The price cuts that were anticipated have started to come in yet. Heritage Foods is one of the companies that we're looking at, and I think they've taken price cuts already, and that is the news that we've picked up so far owing to GST reforms. We have Srideep Kesavan, CEO of Heritage Foods, on the phone line to talk to us about the same. Mr. Kesavan, welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, well within the timeline, 22nd of September is when GST 2.0 was expected to be rolled out. You've already started taking price cuts. If you could give us more in terms of what is the quantum that you've started and in which all products?
Thank you. Pleasure to be on your show. It's an immense opportunity for all of us in consumer goods, especially in the dairy segment. And I say this because dairy is one category which touches 100% of all Indian households. So while GST reforms impact so many various categories, but I guess dairy probably has the biggest impact because of how broad-based it is, and the frequency of purchase of dairy products are so high. We have already announced that we will be passing on the entire benefits of the GST rationalization to the consumer, and we have already started preparing to take productions so that on 22nd of September or a day before, we have these new prices on the shelves. As per the GST Council's decision, the products that are primarily benefited are, first of all, is paneer and UHT, which is long shelf life milk. It's not the fresh milk, it's a long shelf life milk. And paneer have moved from GST rate of 5% to 0%. With this, we at Heritage, we are expecting the paneer prices to drop by 24 rupees a kg, and the milk in Tetra Pak to drop by 3 rupees a litre. From 75 rupees, our prices will be 72 rupees going forward. Similarly, a very big win has been on ghee, butter, and cheese. Across ghee, butter, and cheese, the government has rationalized the GST prices from 12% to 5%, and such a festive cheer because it comes in such a timely manner just before the Dussehra festival, where people would be buying ghee and butter in quite large quantities. And the prices across ghee, butter, and cheese, we expect to come down by 50 rupees a kg.
Oh, interesting, Srideep. Srideep, hi, Mahima also joining. Just want to understand, this is all your value-added products that you talked about where price cuts will be seen. But with regards to regular milk, there will be no price cuts is what I'm understanding. And this is something that consumers are generally very price sensitive also towards. Just wanted a sense there. And secondly, your any kind of impact because of this change on your business from a shorter term perspective?
Thank you, Mahima. So first of all, GST on regular fresh milk, what people buy on a daily basis, was already at 0%. It was already a beneficiary of nil GST, so there is no impact on that. The prices continue to be as before. The impact will be on long shelf life milk, which would be a game changer for us in the long term. Maybe the impact may not be immediate. You know that in the peri-urban and tier 2, tier 3 cities, many of the consumers actually depend on long shelf life milk where fresh milk may not be available. And we expect with this 5% GST cut on that, serious expansion can happen into those urban, newly coming up urban areas over many years to come. But other than that, you're right. The impact is basically on three buckets, which is long shelf life milk and paneer from 5 to 0. Ghee, butter and cheese moving from 12 to 5%. Like I said, it's about 50 rupees a litre would be the benefit consumers have. And we have ice creams, which have significantly moved from 18% to 5%. So we are actually expecting a significant cheer on ice creams as well, especially ice creams that people buy for home segment, for home consumption. Like, for example, we have close to 100 SKUs on ice creams. Right. If I could just talk about one of the SKUs, like, price could come down from 160 rupees to 140 rupees MRP.
Okay. Okay, interesting. All right, Siddhi, thank you so much for coming to us at such a short notice, and of course taking up the time and speaking with us. Thank you so much for that. All right, viewers, it's now time for the Herd on the Street segment. As always, my colleague Samir Sarkar is joining us with all the chatter from the dealing room. Samir, what are you picking up today?
Well, firstly, it's on comments, and dealers are indicating that there are sell flows on institutional desk on expectations of weak export data that has come in for comments. So there are some sell flows on institutional desk at higher levels. For Genius Power, there are the buzz on the street is that there could be a potential block deal, and hence some sell flows have been seen on HNI desk. For Gujarat Fluoro, the block deal was today by the promoter side. The deal happened at the lower end of the price band. The demand was not that quite strong as what dealers are indicating. And among mutual funds, only Axis Mutual Fund and Mirai were among the prominent buyers for Gujarat Fluoro's this block deal. So keep an eye out for Gujarat Fluoro. The block deal data that will come out post-market will be important to track. For Bajaj Finance and ITC, dealers are indicating that there are sell flows on large HNI desk. Dealers indicate that some negative news flows is expected in both these counters in trade. So keep an eye out for Bajaj Finance and ITC. For Kalyan Jewellers, there are buy flows on DI desk. Mutual funds have been buyers in this counter in trade today. The dealers are also indicating that the company has given strong commentary in one of the non-deal roadshows that was held today in Singapore, and that's the reason we are seeing such kind of a move where it comes to Kalyan Jewellers. And lastly, when it comes to Samvardhana Motherson, smart investors have started adding positions in this counter at lower levels, and dealers are indicating that they're expecting a returns of close to around 25 to 30% over the next 3 months. So keep an eye out for Samvardhana Motherson as well.
Thank you, Samit, for those names. Gujarat Fluoro is an interesting one as well on the back of the block deal that Samit was indicating right now. The demand is not quite strong. That is what is coming out so far. And Kalyan Jewellers as well. Strong commentary and strong moves on that one. Kush, anything that actually you think could be a good opportunity, either a buy or a sell, from all the Herd on Street stocks that Samit has got to us today?
Yeah, a little surprised on Cummins. Although, yes, I mean, it's had a good run, some profit booking par for the course, and that club with whatever Samit has put out could see some profit booking. But I would actually be a buyer in Cummins, closer to 4,000, 3950 odd level. So a buy on decline setup. Genius Power also very interesting setup here. The base formation around 325 was rather strong. Volumes haven't really been through the roof, but the price action club with fairly decent volumes suggests that further upside to 355 and about 370 cannot be ruled out. Stop near 335. So yeah, Cummins and Genius Power, good moves. Cummins on declines, and Genius Power as a continuation of this move could be an interesting stock to watch out for.
That's with regards to Cummins India. In fact, also let me get in Vineet Bulinchkar from Ventura Securities. Vineet, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit, and thank you for the patience and for waiting by. Overall, a good sentiment in terms of the markets right now. Bank Nifty, 10 or 11 consecutive sessions of up move that we are seeing. A good buying interest coming in the PSU banking spaces right now. We just spoke to Parag Thakkar some time back, and he's absolutely positive with regards to SBI and HDFC Bank. How are you looking at the banking and the financial names right now? And would you be a buyer? What would your top picks be?
So we are quite positive on the PSU banking space. We like Canara Bank, SBI. Obviously, you mentioned HDFC Bank, which is a perpetual buy for investors. So these are some of the stocks that we like, and the reason being, if you see, SBI is among the large caps, which has really not fallen as much as the index has done. So we think that, SBI could be a massive outperformer going ahead from here. And SBI will also benefit from the stake sale in Yes Bank and the impending monetization of its subsidiaries. I think that's going to be a very strong one on the cards. So that's a top pick in the banking sector. And the Canara Bank is also going to see 2 of its subsidiaries list. So we expect some sizable upside going there too.
All right. The counter that has been the star of markets today is going to be Urban Company. What a stellar listing it has had. The listing gains of around 60 odd %, and currently also seeing gains of about that 66 odd %. And on that occasion, I think we decided to do a bull versus bear on the segment, so that investors can consider both of the aspects and then make a choice. In terms of the listing gains that we saw today, of course 60% plus a 6-7% more gain we've seen in the markets today. But with regards to where valuation stands, extremely expensive with regards to where valuations are concerned for something like an Urban Company, currently trading at 16 times price to sales. Generally, on an average, a platform company has valuations of around 8 to 9 times for price to sales, but this is trading at 16 times, so almost double of what generally platform companies trade at. So valuations looking very expensive. Secondly, in terms of where the financials are concerned, the company has achieved break-even in FY25, but the question really is whether it is sustainable and if this is a sustainable path to profitability or not. Of course, the management did come out and say that their core business is absolutely going to be running on profitable basis. The next one that we are talking about here is, we talked about the financials, but the next one is even in terms of revenue, it's grown over 38% YOY in FY25, but competition in this space is heating up. There are startups coming in which have got heavy funding, and that poses big competitive threat in terms of where Urban Company stands. Of course, right now, for this particular business, it's very much like where Eternal and Swiggy also started. So it's more or less like a duopoly, or maybe three players in the particular space. But of course, competition is heating up. In terms of the SWOT analysis, when we did here, the training skill development is a moat for Urban Company, and they always train their professional, their service providers or employees. But the idea here is that dependence on service professional is very high for them. So that is probably one of the threats, and because competition is also coming in, this could be one of the factors that they need to work on retention of their employees as well. Next, in terms of the cross-selling, this comes easy to them. This is what management said, that if a customer generally comes to Urban Company and takes one services, cross-selling for them becomes very easy and stickiness is very high for them. But on the other side, implementation of new offerings will be a key. They have recently launched Insta Help, and we'll have to see as to how quickly and how widely can they actually go ahead and implement this kind of service. In fact, we spoke to the management about all of these things, listening to what they had to say.
The success of this IPO and the way investors have showed faith is more a promise of the future rather than where the company is today. We recognize that we are still a very small company in the scheme of things, just about break-even last year, less than 1% of the entire home services industry. And, the onus is on us now to work hard, organize this industry, bring standards and quality control for customers, and also help hundreds of thousands of service professionals lead dignified, respectful, middle-class lives, and do it all in a way that it is sustainable, profitable.
After achieving break-even last year, the key is sustenance, and from sustenance it comes to growth. And that's what any investor would look at from a company which is just newly listed. What is that strategy going to look like in terms of sustenance first and then growth?
I think one of the things that we take very seriously is making sure that we disclose to investors very, very transparently and clearly how we are building this company and what is the picture as is. And I think that's something that we will continue to do. Bad news will always travel first to investors. Good news can wait, but bad news will always travel first. And we will try to be as thorough in our disclosures as possible so that investors can make judicious decisions going forward.
Okay. Let's talk a bit about the numbers. Varun, I'll come to you on this. You're, of course, EBITDA break even. Do you see that pathway sustainable is the first question. And then what is the margin picture looking like going forward?
I think for the core business in India, we do believe it's already operating at a healthy margin. So if you see the whole of last year, we did about 3% odd as a percentage of net transaction value. And in the first quarter, we did about 4%. And in that quarter, we had not segregated InstaHelp away from the core business, but we did disclose in our RHP that had it not been for InstaHelp, it would have operated at about 5.2% adjusted EBITDA as a percentage of NTV. So it has been seeing a very healthy trend. It was loss-making 2-3 years back. As it has scaled, that operating leverage has transferred into profitability. And I think for the core business in India, given where it is, our goal will be to continue to operate it profitably. FY25, about 77% of the revenue came from India core services, 13% from international, and about 10% from native.
So that's with regards to Urban Company. Strong listing, 60% up move right now. Vineet, in spite of this initial listing day gains, would you still be a buyer? Or would you wait for some bit of a correction? What is your view in terms of these new age tech companies? And where would you peg Urban Company as compared to peers? Because the valuations are slightly on the expensive side. And as Mahima was telling us, would you be with the bear case or the bull case at this point in time?
So, we were looking at about a 30% upside in the stock. The fact that it's gone up to 60% is not surprising because, it's a very unique proposition. And their ability to offer solutions and solve problems for, consumers at large, especially in the maintenance space, I think, they have got a very sticky business model, which is very difficult to replicate. So I think the market is giving it a premium on that.
Okay, so that's a interesting comment that's coming in as well, from Vineet in terms of where Urban Company goes. But Vineet, stay with us as we slip into a short break. Over the past decade, India's economy has undergone major changes from tax reforms to digital payments and financial inclusion. As the country looks ahead, we take stock of the key moves, their impact, and the road still to travel under the leadership of Prime Minister Narendra Modi. Let's listen in.
मैं नरेंद्र दामोदर दास मोदी ईश्वर की शपथ लेता हूं कि
When Narendra Modi became Prime Minister in 2014, he promised transformative changes. 10 years on, his government's reforms redrawn the India's financial maps from crackdown on the black money to digital payment revolution. Here's a look at his big, bold decision and unfinished agenda.
One of Prime Minister Modi's first moves, a special investigation team on black money. A Supreme Court directive the previous government never acted on. But the defining gamble came in 2016, demonetization. Overnight, 86% of India's currency vanished. The aim? Crush black cash and counterfeits. The result? Chaos at banks, a short-term growth dip, but also a surge in digital payments, laying the foundation for today's cashless economy. In 2017, GST rewired India's messy indirect tax regime, collapsing 17 levies into one. Collections jumped from 45 lakh crore to 1.8 lakh crore in a decade. A GST 2.0 this year further simplified rates. Well, on direct tax front, corporate taxes were cut in 2019, making India more competitive but widening the fiscal gap. By 2025, the zero tax threshold rose to 12 lakh, easing compliance for millions. Banking cleanup was equally sweeping. The 2016 Insolvency Code forced bad loan resolutions, pulling NPAs down from 11.2% to 2.8%. public banks recapitalized with 3 lakh crore swung back to record profits. Financial inclusion scored. 56 crore Jan Dhan accounts opened and UPI exploded to 18.4 billion transactions a month, putting India on top of the global digital payments chart. The industry saw mixed results. The PLI scheme attracted 1.61 lakh crore in investment, but manufacturing share of GDP is still stuck at 17%. Asset monetization, leasing highways and infrastructure, all of this showed promise but lagged in execution. The pandemic tested the Prime Minister's fiscal caution. Relief packages and credit guarantees softened the blow, and by 2023, India was back as the world's fastest growing major economy.
In 11 years, Modi reforms has digitized, globalized and formalized Indian economies. But challenge remains on the dormant Jan Dhan accounts, tangled taxes and land labor bottlenecks. As the Prime Minister turns 75, the economic base is stronger than ever. However, the real test is now to deepen the gains and ensure sustained growth.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Welcome back. You're watching India Market Close on NDTV Profit. We still have Vineet Bulunchkar with us. Vineet, let's talk about few of the names which are buzzing from the large cap space. Tata Consumers, over 4% is the kind of up move that you're seeing in today's session. Would you still be a buyer? Because the gains are absolutely strong. The stock is at the day's highest levels right now. What, according to you, is working for it?
So, their new age verticals are growing very handsomely, and they're able to lift the overall rate of growth for the company. And, margin, maturity of the margin profile is also steepening. So I think that these are good prospects for the stock, and that's why it's going up.
Okay, would you be a buyer?
To be very honest, we have a sell call on this stock because it doesn't fit into our DCF modeling that we do, and we have a sell call with a target below 900 on this.
Sell call below, a target of 900 is what you're looking at on a Tata Consumer. In fact, let me get in Shivangi Sarda from Motilal Oswal as well. Shivangi, welcome to the show and a pleasure to speak to you as always. Few of the top movers in terms of today's session, if I have to look at the large cap space, Tata Consumers, little over 4%, SBI, BEL, Maruti, and a Kotak Mahindra Bank. Let's look at all the 5 names, the kind of green shoots that are emerging here, and the moves that you're seeing. Which would your top pick be?
Good afternoon, Hiral. Thank you for having me. So we've seen that while the indices have, witnessed a good comeback, and I think buying interest emerged quite well. The put call ratio is, above 0.3 levels, which clearly indicates the comfort of the bulls, and Bank Nifty is trading above 55,500 marks. So overall, I think across board, buying can be seen, and the focus would be some of the banking, consumer, of course, has been seeing a good long build up over here as well. But the major focus would also shift on some of the selective IT names.
Okay. So you're saying select IT names is where you would be positive on. What names would that be?
So talking about the IT names, there has been a good movement because of the dollar index movement. So of course there has been a clear direct, impact on that. So some of the names like Coforge have, witnessed good amount of short covering move over here. Of course, it's a little down from its day's high levels, but looking quite positive. And apart from this, the banking stocks, especially the smaller banking name stocks, are looking quite well. Focus would be on the PSU names.
Okay, so that's with regards to the PSU banking space as well. In fact, Shivangi, anything that you would like as a call from the PSU banking space, what would your top strategies be?
So from the PSU name, of course, I'm liking PNB, which has given a fresh breakout with volume. The kind of surge that we've seen has been seen after a really long period of time, with Bank Nifty outperforming and finally trading above 55,500 will be a good trigger for this one to move. Of course, it's also surpassed its previous hurdle zones of 108 and now acting as a crucial support levels. So recommending a buy here with a target of 115 and a stop of 110 levels.
Okay, so Shivangi, that's with regards to where PNB comes in, and that becomes one of your top picks as well as we speak right now. But moving on, Vedanta is another stock that I want to discuss about with Vineet. Vineet, how are you looking at Vedanta? Because the stock is under pressure today. The hearing has been deferred to the 8th of October. This is the third time where NCLT has deferred the hearing. What would you advise investors to do with the Vedanta?
I think, if you try to time the, Competition Commission's hearings, it will be very difficult to gauge when it will actually happen, because, in the case of some other stocks, we have seen government judgments being postponed for no apparent reasons. So usually I do have patience on this stock. I think there is a lot of value to be gained after the, the demergers happen. And currently, with the interest rate cuts impending in the US, I think commodities are going to be on a tear going ahead.
Okay. So that's with regards to where Vedanta goes. But moving on, some of the top newsmakers of the day. Let me head across to Vansh to tell us what's happening with the Aditya Birla Fashion, Mahindra Lifespace, and One MobiKwik. All of three buzzing either on the upside or a downside. Vansh, what is working for these companies and something which is not?
Well, yes. So let me start off with Aditya Birla Fashion first. Now, the company has launched its own brand called Owned. Now, this is a new brand name, new identity and new contemporary that the company has laid out. And in fact, the company aims to accelerate its play in the value fashion category as well. And the company plans to convert the existing style-up stores into owned outlets as well. Also, the company plans to expand its footprint to 100 stores by end of this financial year. And also, in terms of the guidance post this demerger, the company is expecting to triple its revenue in the next 5 years, and they're expecting EBITDA margins to expand to about 7% from the current loss-making margins, and they are also targeting 18% ROCE by FY30 as well. And lastly, they are also looking to open 250 stores every year. And they are also looking out for a franchise-owned stores by 70% plus franchise-owned stores by FY30 and 100,000 stores in small town as well. Second, we have Mahindra Lifespace. Now, the company has been chosen for two society redevelopment project in Chembur in Mumbai. Now, it's also important to note that this company realizes the revenue once the project has been completed and has been handed over to the client. Now, the gross order value for these projects stands at about 1,700 odd crores, and the two projects span for a total of 4.4 acres as well. Third on my list is One MobiKwik. Now, the company has reported an incident involving unauthorized transactions. Now, they have some registered merchants and users that have colluded to claim illegal settlements. The activities were identified in limited locations with Haryana, and the FIR has been filed for 40 odd crores, and the company has already recovered 14 crores, and the current estimated net impact, the current net loss impact would be about 26 odd crores. So these are some of the stocks that remain in focus.
Thank you so much for that, Vansh, for getting us the quick updates. In fact, Vineet, let me come to you. Aditya Birla Fashion, Mahindra Lifespace, firing on all engines. MobiKwik as well has a good run, but starts to see some bit of selling pressure. What would your advice be on these three counters?
I think, the Indian retail is going to do extremely well, and most of the, retail companies during Q1 have announced growth plans, and they're expecting growth also to pick up. So confidence comes to us that these sectors should also perform, and ABFRL is making the right noises. We think that these stocks can be accumulated. As far as MobiKwik is concerned, it's more of a buy on dips, because we've seen some very large volumes, and the management has also guided to QOQ 30% growth with margins stabilizing around 35%. These are, good omens to hear from the management, and we think that the stock should do well going ahead.
That's One MobiKwik. The stock should do well going ahead. But let's quickly also address a few of the volume buzzers in trade today. I have my colleague Jasmeet who's standing by to tell us which are the stocks which are buzzing on volumes and good moves there. I think we don't have Jasmeet on that, but you have a KNR Construction. Strong moves in terms of today's session, 5% up move, volumes up almost 119 times its 30-day average. DCM Shriram is another one which is seeing good volumes. Sidhu Trade Link, Gujarat Fluoro, there was a block deal on that one as well as the Lux Industries, which is seeing good volumes. On the back of these volume buzzers, Shivangi, let me come to you. Would you recommend anything that comes to your radar from these names?
Of course, we've seen a good amount of volumes and price action here in today's trading session. But of course, these names have to sustain above these levels for a good sustainable up move. So I would recommend a little wait and watch here. These counters and some of the PSU names counter which are gaining attraction.
Okay, so those are the volume buzzers that you're looking at as well in terms of KNR Construction. That comes to Shivangi's timeline from here on. Apart from this, let me look at a few of the other names which are actually seeing some downtick. Bajaj, Finserv, ITC, both seeing cuts to the tune of little over 1%. Bajaj Finserv, SBI Life, HDFC Life also trading under pressure. So there is some bit of pressure in terms of life insurance companies. Vineet, your views on Bajaj Finserv and SBI Life and HDFC Life?
In my opinion, these blips are temporary. Once the GST rolls out, the 2.0, we will see some very strong demand for stocks from the insurance sector. And especially your health insurance should do well. I believe that, premiums might just increase and consumers might want to, pad up on the GST that they're saving up. So we will not only see good growth in terms of average premiums, but we'll also see number of policies also getting added. So growth factor should get a kick up here, and we remain buyers on declines.
As a part of our special coverage on PM Modi's 75th birthday, let's see how broader markets have performed during Prime Minister Narendra Modi's more than 11 years in office. Jasmeet brings us with all the insights on how broader markets have done.
Well, right, yes, thank you for that. Let's quickly understand how the Nifty mid-cap have done in this particular tenure of 11 years. Now, if you look at the mid-cap 150, the overall return they have given for the last 11 years is 333%. And if you analyze it over the annual return, the compounded growth, it's at 17.7%. Now, if you look at the top gainers in the stock who have performed really well, the starting off with Minda, which has given 18,000 odd % return over this tenure. But if you look at the compounded growth, it's at 60 odd %. While there are a set of 5 companies, that's KEI, we have KPR, we also have APL and Solar Industry, which have given the compounded return in the range of 40 to 60 over the last 11 years. Let's quickly understand how have the small cap have performed altogether, the 250 small cap. If you look at the return from last 11 years, they're at 282% and compounded at annual level, they give a return of 14 odd %. And again, here the top gainer, that is Ola Electric, that's a green tech company. It has given a return of 14,000%. When you analyze it on yearly basis, it's at 56 odd %. If you look at the stocks, they have been ranging at from 44 up until 56% of annual return in the tenure of Shri Mr. Narendra Modi. So these are the stocks on broader market basis.
Okay, Dasmi, thank you so much for bringing us those details. Shivangi, quickly, your BTST ideas.
So Mahima, my BTST idea would of course include a PSU named stock, which will be CNB. It has attracted a good amount of open interest, and we've seen that the stock has actually, had the tailwind of the Bank Nifty as well. 17 and the support of 109 levels.
Okay, all right. So that's with regards to where Shivangi's BTST is concerned. Shivangi, a lot of other names that have, seen significant amount of gain from its day's low point. That includes something like DCM Shriram, India Pesticides, Red Tape, even Banco Products is seeing that kind of gains. Anything in particular that you're liking from this stack?
Of course, DCM Shriram has witnessed quite a lot of movement today, and we've seen a good amount of volumes adding up. The stock had been beaten down from the last, many weeks, and we've seen a reversal here coming in and recouping half of its loss from the previous month. But of course, now it needs to hold above 1350 levels for the next leg of rally to continue in this one.
Okay, so that's with regards to DCM Shriram. But thank you, Shivangi, so much for joining us on the show and giving your views and your top trading bets as well. In fact, we also spoke to Samir Arora, founder and fund manager at Helios Capital, about his top sectoral bets. He remains bullish about financials, but remains worried about the IT sector. Let's quickly listen into what he had to say.
If you look at the 3 pools, one pool is financials. And the financials, which are dominated by the big banks, they have had a below 10% type of growth because of interest rate cut and NIM compression, which they themselves are saying, and everybody agrees that that is a matter of 1 or 2 quarters, that from next year, because this becomes stabilized and the interest rate cuts pass through to the deposits and all, that over time that NIM goes back. And generally the thumb rule is that the financial sector or the banking sector grows about 1.5% to 1.7% of GDP in nominal terms. So you will get back to that 14-15% growth. I'm only worried about the IT sector, but the IT sector today weight is about 10-15% because they are not going to grow 15% like or even higher than they used to grow in the past. Maybe they grow from 3% to 8%. So that compression will be there. But even the consumer sector now, whether it is one-off or it is catch-up or it is pent-up, but you're going to have a massive 1 or 2 months starting on whatever, 22nd.
Okay, so that's the view coming in with regards to where, Samir goes. And IT sector is what he's worried about. Vineet, what is your view with regards to IT?
I think you should get out of IT stocks the sooner the better. I think there is going to be a negative domino playing out in the US. And we expect that to, kind of have a very bad impact on the Indian IT service companies. So we are advising clients to book profits out here and get into domestic themes.
Advising clients to pay the domestic theme right now is Vineet's view. Vineet, thank you so much for taking out the time and giving us all those insights. Always a pleasure having you. All right, viewers, let's take a quick look as to how the markets are closing for the day. Well above 25,300, 30 points above that 25,300 levels for the Nifty 50, up 0.4%, almost 93 points of an uptick that we've seen in trade today. So well above that 25,250 mark that Hiral was talking about. So the momentum is expected to continue from here on. The Nifty Bank seeing gains of about 0.6%, outperforming the Nifty 50 as well, largely led by the PSU Bank. Let's also take a look at the Nifty 50 heat map, and that will tell us as to how stocks have performed. Tata Consumer leading the pack with 4% of gains, followed by something like an SBI, BEL, Maruti, Kotak Mahindra, Ultratech. So a lot of banking names combined with something like a Tata Consumer and some auto names doing well in trade today. Something like an Ultratech, Shriram Finance and Trent also seeing gains of about 1%. But something that's under pressure, Bajaj Finserv down 1%, Titan turned into red and down by about 1%. Hindalco down about 0.8%. ITC not riding that FMCG wave right now, down by about 0.8%, followed by HDFC Life, Eicher Motors and Tata Steel. Let's take a look at the advanced decline ratio, because that will tell us as to how broader markets have done throughout the day, and that entire chart has narrowed down. In terms of the advanced decline ratio, around 1,400 odd advances versus that of 960 odd declines, which in fact started at 300. So declines, of course, have increased by the day, and the ratio is now almost 1.5:1, and that's where we are ending at. With regards to where the broader markets are concerned, the mid-cap 150, trading around 0.13% higher, so not as good as what the benchmarks have done. In terms of the small-cap 250, largely in line with how the Nifty 50 is done, up by about 0.5%. But some names in specific, BSE 500, let's try to pull that up and see what are the counters that have done really well. DCM Shriram, like we talked about, up 10%, LG Equipments up 6.7%, Kena Construction up 5%, Bank of Maharashtra with a gains of about 4%. Tata Consumer, a Nifty 50 name in that chart, quite an interesting one there as well. But something that's not done well today includes KIOCL down by about 5.5%, Aditya Birla Sun Life, Cohance Life, Borosil Renewables all down by about 2%. But most importantly, what to watch out for today post-market hours, that will give you hints for tomorrow's markets. So the first thing and most important one, the FOMC interest rate decision, that will tell us whether the rate cut is coming in or not. In terms of corporate actions, these counters will be trading ex-dividend. That includes Jamna Auto, GMDC, Good Luck India and NLC India. In terms of some other names, Venus Pipe, Shakti Pumps, Quality Power Electricals, Hindustan Coppers are some names that will be trading ex-dividend. And in terms of stock split, there is Zydus Wellness that will see a stock split from 10 rupees to 2 rupees per share. So this is with regards to everything that you need to keep an eye on. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Thanks for tuning into this very special broadcast. And at the point of time when the India-US relationship seems to be thawing, if I can use that term, and people would want to know about what is it that some of the biggest global voices will be thinking about this, about the reforms, GST reforms and others, and the markets ahead, particularly in a year when the Indian markets, contrary to the past, have moved sideways. You can't think of a bigger and a better voice than Christopher Wood, Global Head of Equity Strategy, Jefferies, Tamanna.
Absolutely, and we're pleased to welcome him on the conversation with us today. Chris, great to have you with us here on NDTV. Thank you so much for your time. You know, I'm recalling your comments, and it's because we started the conversation in the context of the India-US relationship on your last note, where you talk about, and you call it out quite clearly, that perhaps what President Trump is not too happy about is not getting credit, what he sees as credit, for solving India-Pakistan or the ceasefire. Do you think we've moved some miles away from there?
Well, yes, the sort of vibes suggest we've moved a bit beyond that. So I think it's perfectly understandable why people's expectations that some kind of deal can be agreed have improved. And there's got to be, I would say, a 50% chance that something's agreed in the next few weeks, months.
Wow. Chris, in which case, you couldn't have chosen a better time for your conference, right? I mean, what's the mood now? The mood maybe 4 weeks ago would have been different. The mood currently would be palpably positive.
Yeah, but this whole tariff thing has not really hit the stock market that badly, right? So I think because in the first instance, no major listed companies are impacted. But if I'm wrong and we have 50% tariffs still in a year's time, then clearly there's going to be a macroeconomic negative ramifications from these 50% tariffs. And I certainly would never have expected at the start of this year that India would be facing 50% tariffs.
That's actually, you're right, Chris, that's something that took everyone by surprise, which is why, are you also seeing this thaw with a bit of a question mark? Let's see where this pans out. Or to your mind, 50% on tariffs on India is not something that's sustainable or feasible at all?
Well, to me, the base case is that it'll be relaxed by the year end. But if the demands from the US remain that India open up agriculture, then, I don't believe there's going to be a deal. And if the demands remain that India stop buying Russian oil, then I don't think there's going to be a deal. But there is a potential for India to reduce buying of Russian oil simply because the price differential with world oil reduces. But that's a different thing from being ordered to stop buying Russian oil by the US.
Yeah, I think you hit the nail on the head. Ordered is the key word in that sentence. If I were to ask you very clearly and simply, what is worrying global investors right now when they look at India? Is it the 50% tariffs or is there something more?
No, it's not. I don't think it's the 50% tariffs. This is a year where clearly the FIIs have record low ownership in India. Our base case is that the Indian market is currently trading sideways. because we've got a situation where the market's supported by the incredibly impressive continuing domestic inflows into the mutual fund industry. And those inflows are helping to absorb the other feature of the Indian market right now, which is supply from the corporates, as corporates take advantage of the high valuations. So this supply is being absorbed by the mutual fund flows, and essentially India has been trading sideways. And I view this year as a year of healthy consolidation in the Indian stock market. And I'm hoping next year we see a pickup in earnings growth driven by a pickup in nominal GDP growth, which will allow the Indian market to do better. But we still have this question of relatively high valuations in the emerging market context, and we have the ongoing issue of equity supply.
So, Chris, maybe in the last 3 months, culminating into this conference, what is the most asked question to you from investors who read your notes or who've come to the conference to hear you?
Well, are you asking about foreign investors or from a foreign investor standpoint? Yeah, India is not being flavor of the month because one reason India's basically been trading sideways, but clearly India's been a big underperformer in the emerging market context, and that's simply because other markets have done well. So a year ago, China put in a major bottom, and definitely foreign investors, fourth quarter last year, first quarter, I'm talking calendar year, first quarter this calendar year, foreign investors were selling India to fund increased investments in China. And that has made sense because China put in a major bottom a year ago at about 7-8 times earnings. More recently, the foreigners have been selling India to fund increased positions in Korea. Korea's done very well this year, and foreigners had to play catch up. And they've also been having to put money back into Taiwan. I'm talking about emerging market investors because Taiwan is the same trade as the US stock market running on the AI capex theme. So to me, the chances of returning to foreigners returning to India grow as we get near to the end of this calendar year, because hopefully we will start to see evidence of a pickup in growth caused by the various policy easing seen this year, be it RBI easing or be it the GST cuts. And clearly one positive spin-off of this US tariff situation is it accelerated the simplification of GST and the cuts in the GST rates. So in that sense, the US tariff thing will prove a medium-term positive.
Chris, for a lot of people, India is missing the AI theme, a couple of other big themes globally, but India has its own positives, right? So when people talk to you about that, oh, India doesn't have AI, so where is it that you can put big money to work? What is your message to them? Because I know you track India very closely for a number of years, right? Over the next 24, 36 months, what is top of mind for you when it comes to India? Investable themes.
No, the key thing for me is, do we get a pickup in nominal growth? I'm talking macro here. Do we get a pickup in nominal GDP growth? Because when companies report earnings and sales, those are in nominal terms. And nominal growth this year in India has slowed below 9% year on year, between 8.5%. And that slowdown has been reflected in the slowdown in earnings growth in the Indian stock market. Whereas if I'd been here a year ago, I was viewing India as historically in a 10-12% nominal GDP growth range. So a very important point going into next year is, does nominal growth pick up more towards 10%? In which case we will definitely get a pickup in earnings growth in the stock market. And that's what I'm expecting given the monetary easing. However, if this time next year nominal growth is still below 9% in India, then that will raise questions, are we having a structural slowdown? On the AI issue, clearly there's a very important point where the IT services sector is potentially at risk of disruption on AI, just like the software sector is everywhere. That to me is just an issue for everybody involved in software.
Yeah. Chris, you referenced the GST rationalization. What is the kind of impact you see in boosting consumption, and would that tie in your expectations for nominal GDP growth in terms of India? You also recently for example, added M&M, exited another stock from your portfolio, from the long portfolio. Do you see autos as a primary beneficiary of the GST rationalization?
Well, they should be, and also two-wheelers. So basically, seems to me that this year the Indian domestic fund managers have been, since actually the budget, when you had the income tax cuts, there's definitely been a switch out of what I would call capex plays to more consumption plays. And that trend was already happening, and it's clearly been further encouraged by the GST cuts. And of course, the monetary easing. We have to recognize the monetary policy and the credit policy last year was basically pretty tight. And that's, I think, one reason we had a bigger fall in inflation. So where everybody's anticipating a pickup in consumption, as I say, so have I. If it doesn't happen, it would be a negative surprise.
Consumption is also a fairly wide basket. Would be interested and curious to know where you think that consumption boost is going to come. Is it in the staples? Is it more discretionary? Where do you think Indians are going to spend that extra money?
No, I think it's both, depending. But I think one big issue is you get a bigger pickup in rural areas, right? But I think it's broad-based because the policies are broad-based.
In terms,
and hopefully the GST cuts will not derail the fiscal because there'll be a corresponding pickup in sales activity.
Now, having said that, in terms of what is exciting you from that consumption space, where is your narrow focus right now?
What do you mean, sort of narrow focus? In
that very broad basket of the consumption beneficiaries, what are you liking better?
No, well, I have investments in the auto-related sector, but then obviously the consumer finance companies are geared to this whole pickup too, or what you call here the NBFCs.
Chris?
But I think this theme is quite well understood. I also believe the property sector, which many people think the property upcycle is over after a 4-year upturn already. Personally, I think the slight slowdown you've had in the property, I'm talking residential property this year, is a pause to refresh, and I think the property cycle will continue in India. Okay. So I also have property exposure in my portfolio.
Yeah. To be fair, you are amongst the earliest proponents of the property upcycle well before it started as well. So kudos on that. Just wondering, Chris, because the conversation is tilted so much towards consumption, capex is being kind of forgotten, and save for this year, India's been a capex-driven story. You reckon at some point of time, capex plays might come back into flavor in India?
I know, I definitely think they'll come back. You're absolutely right. This year, the sentiment, particularly amongst domestic investors, based on my conversation, has been to say, get very excited on consumption and to give up on what the private sector capex. So basically, in the last 10 years, the real pickup in capex came from government-funded capex, and there is a sense that the private sector could have done more on the capex. But if we get evidence of a pickup in demand driven by all these easing measures, then I think it's entirely rational to expect a pickup in capex down the road. So personally, I think it's too bearish to assume that, to give up on private sector capex on a 5-10 year view, which is many people, the sentiment now is very bearish. So if you were a contrarian and you had an outlook extending beyond the next 6 months, you might be thinking about adding to capex plays here.
If you weren't contrarian, and of course, if you were looking at what is moving right now, would platform companies make the cut? A lot of businesses that actually have grown because they've gotten consumers used to using them as a platform. Is that a space that you're finding exciting or overvalued from the Indian perspective?
Now, the platform companies, globally, investors want to own the platform companies. And clearly there's some in India too. And equally clearly, the AI technology allows for more personalized advertising in some of these companies. So this is an ongoing thematic.
Got it.
So the problem in India remains what it's always been on a medium-term basis, and that's what not to own.
Chris, India's in the last 2-3 years maybe become a low beta market, right? It underperforms on the downside. It doesn't quite perform as well as some of the other markets on the upside. Because you cited how in the last 6 to 9 months, India's underperformed massively. If the trade deal is reached, is there a case for a strong rally in Indian markets despite the valuations that we currently trade at?
No, I think there'll be a bit of a pop, not a strong rally, because I don't think the market really sold off dramatically on the news flow.
Okay.
I think these 50% tariffs become negative for the market and the economy the longer they're in place. So if they're in place a year, then that is a problem.
But if they get resolved, then we see a pop. Okay, fair call. The
only good thing about them being in place for some time, it will act as an incentive for exporters to look for other markets.
Yeah.
Which is an important point. Because maybe many people were very comfortable with existing relationships, so this will be a healthy wake-up call to diversify your export base. But at the end of the day, the Indian stock market is first and foremost a domestic demand-driven story, as is the Indian economy.
That's true. For the markets, Chris, though, how big a role would any kind of global central banking decision do? We are on the cusp of the Fed decision. What role could the Fed moves play for Indian markets?
Well, all the Fed easing, what it means for India and other emerging markets, it just gives them more room to ease monetary policy. So in my view, my big picture view is that the US stock market has made an all-time peak as a percentage of world market capitalization at 67% on December the 24th last year. And part of that view is driven by my view that the dollar is in a long-term downtrend. And that, if that is indeed true, it's been true so far this year, that's good for all emerging markets.
Chris, we've been talking about tariffs from an Indian perspective, but if I asked you to your view on a broader horizon, and how are you seeing the impact of Trump's tariff policy play out for the American economy? It doesn't seem to have hit too hard so far, but do you think that will continue?
Well, I think the key point is a lot of tariffs have been announced. But in terms of the average effective rate of what people are paying right now, we're still at about 10%. But in terms of what's been reported, we're more like 17, 18%. So my view is very simple. And to begin with, companies will try and I think reduce the impact on the end consumer by making savings elsewhere. But the longer the tariffs are in place, my view is very simple. The more that those increased costs will be paid by US consumers. So the more they're in place, the more likely it is to hit the US economy. But for now, there will be measures to reduce the pain for US consumers. So I'll give you a practical example. I was in Japan last week, and the Japanese car makers have cut significantly the price of their cars exported to the US this year. So that will please Donald Trump, because Donald Trump argues that the exporters will eat the tariffs, whereas most economists, by the way, I'm not an economist, would argue that the American consumer will end up paying the bill.
Chris, where are you on that argument, by the way? Do you reckon that inflation is going to make a headway into the US, or is growth going to triumph over inflationary pressures, and what role would that play for future rate decisions by the Fed?
No, my view is very simple. The Fed's cutting rates today, and that's a clear message that the Fed is basically prioritizing a slowing labor market over inflation, because whatever happens in the future, the practical reality today is inflation remains, well above the Fed's 2% target. So the Fed's cutting rates, so the Fed has fudged the 2% target.
Chris, the other question is around the de-dollarization. Heard it for long. It's never happened. But now increasingly a lot of US investors saying that they want to diversify out of US. What is a possible long-term trajectory of this? Does the dollar depreciate over a period of time against all major currencies, including EM currencies? Have you given some thought to that?
No, I think the base case is that's exactly what happens. The dollar depreciates. against most currencies. So we've had a significant revaluation of the euro year to date, despite the fact that the ECB was cutting rates more than the Fed. And the Asian currencies, in my view, have begun long-term appreciation trends. I'm saying the Singapore dollar, which is the equivalent of the Swiss franc in Asia, can get a parity against the US dollar. It's not unrealistic to view the renminbi as going to 5 against the dollar on a medium-term 5-year and more basis. As for the Indian rupee, mentally, I think I'm viewing 89 as the bottom. And I think Asian currencies have begun a long-term appreciation trend against the dollar. To hedge the dollar weakness in my global equity portfolio, I have 10% weighting in gold mining stocks, which are right now rallying dramatically, and I have a long-standing position, currently 6% in the Bitcoin ETF. So I've got 16% of my global equity portfolio hedging dollar weakness.
Wow, that's large. That's large.
So, just to bring it back to India, with that very interesting American view. For India right now, we talked about the GST rationalization in the context of tariffs and a buffer to them perhaps. But what more do you think needs to be seen for that comfort of a move towards a nominal GDP growth of 10%? What would you have in the list, in the wish list, if at all?
No, I think the Indian government's basically done what it can do on this one. So to me, it's just a question if the animal spirits pick up a bit. I think the policy measures are in place. The RBI has already eased a lot. I don't think the RBI needs to slash interest rates dramatically more because they've already eased policy a lot, and you don't want to undermine the currency. So I think basically the policies are in place.
You know, Chris, we're also speaking on the occasion of Prime Minister Modi's 75th birthday. And some of the programming that we're doing today is to look at his government's policies and the impact they've had. You've been vocal about what this government has been doing and the impact of its policies. Anything you'd want to add there?
Well, no, I mean, just there's obviously been dramatic progress in India under this government. That's just obvious. So if I had to cite one obvious area, is the huge pickup in government capex, which has created huge improvements in infrastructure and therefore, created a much better framework for the private sector to operate in.
In terms,
I think another area I'd mention is the bankruptcy reform process, which appears, obviously it takes time, but that is a major change in India. Another major dramatic change has been the Real Estate Regulation Act, which I think creates a much more sustainable property cycle than we saw in the past. So those are three specific areas I've mentioned. There are many more though. And obviously GST is another example.
Yeah, in fact, Chris, for a lot of people, GST 2.0 was arguably one of the biggest reforms. So one big bang reform done, RBI cutting rates as well. What else would you want, let's say over the next 12 months from the Indian policymakers?
Yeah, but when you talk to the policymakers in this third term of the Modi government, there's been a lot of talk about addressing what I've heard referred to as regulatory cholesterol, thereby improving the ease of doing business in India. So it's easy to talk like this, but clearly I think the government's extremely focused on this. And that I think is a very healthy focus. And that's something that's can't be done just by pressing a button. But everything I'm hearing makes me think this government's very much focused on this whole issue of ease of doing business, which can only really be implemented at the bottom-up level.
Chris, a lot of our viewers are average retail investors who are now tracking equity markets. They look to our coverage of your notes. They will be looking very closely to all your message on the Indian markets. What would you like to communicate to them? Investors who've seen a big bump up in the last, I think, 2 or 3 years, and then a tepid kind of move on their portfolios in the last year or so. What would you tell them today?
No, I think they should continue to do the average investing, which is how they're operating. Many of the people are investing in this country on the SIP program. That seems to me a very rational way for investing in the stock market.
And in terms of what you see as the future of the Indian stock market, where do you see the Nifty perhaps closing 2025 at?
No, I haven't got a benchmark, but I would also add one other thing. I mean, they should obviously own equities, but I also think Indian government bonds at the current level are attractive too.
Okay.
Because I think the fiscal situation in India is in my view being well managed, and in my view the yields are reasonably attractive, and I would certainly much rather own Indian government bonds than US Treasury bonds.
Wow, that's quite a line to wrap up. Thank you so much, Chris Wood, for speaking with us.
Yep.
Well,
and have a great remainder of the conference, Chris. Really appreciate your time.
Thank you.
All right. And well, with that, viewers, it's a wrap on this very special conference from a very constructive Christopher Wood, Global Head of Equity Strategy at Jefferies. Thanks so much for tuning in.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The market ends higher ahead of the FOMC outcome as Nifty gains for the second consecutive day and Sensex closes more than 300 points higher. All indices except metal, FMCG and pharma finished in the green. Birthday wishes pour in for Prime Minister Narendra Modi as top industry leaders, economists and policy makers as the Prime Minister celebrates his 75th birthday, inaugurating landmark initiatives in Madhya Pradesh's Dhar. GST cuts are a positive for the Indian economy versus the tariff negative, which will reverse soon, says Chris Wood of Jefferies. Adds that whether it will aid the pick in nominal GDP growth is what needs to be monitored. Income Tax Department's Mumbai wing surveys Marico's offices. Sources say the scale of the matter will be ascertained once all relevant documents are perused. IT officials are questioning senior employees. Urban Company gains over 60% at close after a bumper listing, debuts at 57% premium. Founder Abhiraj Singh Bhal says core business will continue to be profitable. The government plans a big push for e-commerce exports, may set up special export entities to handle customs, compliance and logistics. Plans a pilot project with few export entities before a larger rollout. Kerala on high alert after brain-eating amoeba claims 19 lives. The state records 71 cases and 19 deaths due to primary amoebic meningoencephalitis. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's dive right into how the markets fared today. The Nifty closed higher for the second straight day, finishing above the 25,300 mark. Tata Consumer and SBI led the gains, while Bajaj Finserv and Titan were the top losers. Mid and small caps continued their winning streak. And for more on this, let me go over to my colleague Varsha, who's joining in with the wrap of all of the action in the market today.
Yes, Nifty ends higher for the second consecutive day, ends about 25,300 mark. Top Nifty gainers were Tata Consumer Product and State Bank of India, while top Nifty losers were Bajaj Finserv and Titan. Nifty PSU Bank emerges as top sectorial gainer. Gains were led by Bank of Maharashtra and Punjab National Bank, while Nifty Metal, if you see, is the top sectorial loser, which was dragged by Jindal Steel and Hindustan Copper. Onto the small cap 250, it gained for the fourth consecutive day, which was led by TV18 Broadcast and Garden Reach, while Nifty Midcap 150 ends higher for the 9th day in a row. All sectors ended higher except metal, pharma and FMCG. Nifty PSU banks, if you see, gain for the 3rd day in a row. Nifty Oil and Gas and Realty again for the 6th day in a row. Nifty Bank gains for the 11th consecutive day, and Nifty Auto gains for the 2nd consecutive day, while Nifty Financial Services gains for the 11th consecutive day as of today.
Right, thanks Varsha for that. And meanwhile, today marks the Prime Minister's 75th birthday and he received heartfelt wishes from many dignitaries and global leaders on social media. In fact, US President Donald Trump called him a friend, praising his leadership in a phone call, while Italian Prime Minister Giorgia Meloni shared a selfie calling him an inspiration. Israel's Benjamin Netanyahu lauded Modi's achievements for India, and former UK Prime Minister Rishi Sunak highlighted and spoke about the strengthened UK-India ties. Russian President Vladimir Putin and Microsoft founder Bill Gates also extended warm greetings, noting India's global influence. Now, under the Prime Minister's leadership since 2014, India's economy has seen robust growth, becoming the world's 4th largest economy with a GDP of over $4 trillion. Initiatives like Make in India and Digital India have boosted industrial and technological advancements. The Nifty index delivered a remarkable 241% return from 2014 to 2025, reflecting investor confidence and economic reforms driving market growth. And amid the nationwide birthday celebrations for the Prime Minister, NDTV Profit spoke to some of India's most influential voices in business and economics. We spoke with Sanjeev Sanyal, a key member of the Economic Advisory Council to the Prime Minister, Samir Arora, the founder of Helios Capital, Nadir Godrej from Godrej Industries Group, and Prashant Khemka of White Oak Capital. Listen to what they had to say about the Prime Minister's contributions to India and its economic journey.
By 2013, we were being called the Fragile Five. Our banking system was in deep trouble, inflation spiked up, and so on. So then, this is the context in which in 2014, Prime Minister Modi came to power. The reforms had been stalled by this point for almost a decade. The economy had done well for a period of time in the 2000s, but then had slowed down and then had been artificially pumped up with lending, which had led to this macroeconomic instability problem. So his first problem that he had to face was to anchor the macroeconomy to something. And that is the context in which you got the inflation targeting framework being put in place. You also saw the big effort to create a framework for creative destruction through the Insolvency and Bankruptcy Code, and then that was used to clean up the banks. So that is really what was going on, anchoring India's macroeconomy. So that was the first big thing that he attempted to do.
on the capital markets is easy to see because we are beneficiaries of that, which is the fact that so many investors have come into the market. And although you may say that the investors, what specifically was done is was the ease of doing things online or digitalizing things. So you can see in the mutual fund industry where, say, we are one of the recent entrants, and suddenly out of nowhere, without having to set up our own infrastructure, people can go online and buy. And all this has been enabled by the fact that it was easier because of Aadhaar, because of bank account, because of people becoming comfortable with digitalization, that they could do these things online on their own. So I can see that as a big picture, immediate or a direct impact on capital markets.
Yes, I was just thinking it would be 75. 75 is the age to celebrate everything that turned out great, and also to carefully reflect on what we need to still perfect. Some claim it is the ideal age for an action hero to become a sage, a time to reflect, a time to scan and carefully lay a future plan.
The biggest positive impact in the real world of a healthy or a rising equity market, which is often underestimated by I would say globally, policymakers globally, is that it channels financial capital towards entrepreneurs. You know, fundraising, IPO frenzy, and all this. Think of the real world positives of that. So many entrepreneurs are able to raise capital, be it 1,000 crores, few hundred crores, or even SME exchange. You know, yes, there would be duds during the process, but so many healthy, good, positive outcomes would be delivered because many, fruitful ventures, which eventually go on to become big companies, contributing very healthily to job creation and economy, they all get funded because of this. And that's the best part of a healthy equity market. And when I see all these IPOs getting heavily oversubscribed, it's a very positive outcome, as I see, for the real economy.
And let's also look at how India's position in the global economy has evolved under the Prime Minister's tenure. From taking up the G20 presidency to deepening trade ties with its global partners, here's a report on how India has been shaping its global economic footprint.
One of the key highlights of Prime Minister Modi's journey across the last 10 years has been the comeuppance of India in both the trade and the global order. When the Prime Minister took office in 2014, India's merchandise exports stood at roughly $314 billion. Today, they've crossed $450 billion, and services add up for another roughly $350 billion, taking the total services and merchandise exports to over $800 billion, with an aim for $1 trillion more in the current financial year. Apart from that, you have the free trade agreements that India has been able to sign. You already have free trade agreements with the likes of the UK, UAE, as well as Australia in the bag, while India is in the midst of negotiating 10 crucial FTAs with the biggest ones, the European Union and the United States, currently under negotiations. These show India's negotiating prowess and also the willingness to take India's industry to the next level.
We are already the fastest growing large economy under the bold, visionary and decisive leadership of Prime Minister Modi, and we will continue to grow to become the third largest economy of the world by 2027, to become a $35 trillion economy by 2047 when we celebrate 100 years of independence.
India's G20 presidency in 2023 was seen as a platform to highlight concerns of the global south, while simultaneously strengthening India's own position in the global economic governance. With the US, trade in goods and services has expanded to over $200 billion annually, supported by cooperation in technology and clean energy. At the same time, India has managed to deepen its engagement with BRICS while carefully managing differences within the grouping.
Our negotiations in our trade talks have been really under great stress, and this has and leadership of our Prime Minister has helped us iron out all these important issues wherever required. That's why if you see, India is in a dominant position now in our trade talks, and all of our deals are, I would say, win-win situations, especially for India.
Engineering exports now account for nearly a quarter of India's total exports, with Europe and North America remaining key destinations. Efforts to diversify markets in Africa, West Asia, as well as Latin America are underway, supported by government schemes and industry-led initiatives. Together, these shifts show how India's trade and global positioning have evolved during Modi's tenure, driven by opportunity and, more likely, strategic necessity.
Meanwhile, in an exclusive conversation, Christopher Wood, Global Head of Equity Strategy at Jefferies, spoke about what could power the next phase of India's growth story and the approach that retail investors should be taking. Let's listen into his perspective.
Policy measures are in place. The RBI has already eased a lot. I don't think the RBI needs to slash interest rates dramatically more because they've already eased policy a lot, and you don't want to undermine the currency. So I think basically the policies are in place.
You know, Chris, we're also speaking on the occasion of Prime Minister Modi's 75th birthday. And some of the programming that we're doing today is to look at his government's policies and the impact they've had. You've been vocal about what this government has been doing and the impact of its policies. Anything you'd want to add there?
Well, no, I mean, just there's obviously been dramatic progress in India under this government. That's just obvious. So if I had to cite one obvious area, is the huge pickup in government capex, which has created huge improvements in infrastructure and therefore, created a much better framework for the private sector to operate in.
You know, in terms,
I think another area I'd mention is the bankruptcy reform process, which appears, obviously it takes time, but that is a major change in India. Another major dramatic change has been the Real Estate Regulation Act, which I think creates a much more sustainable property cycle than we saw in the past. So those are three specific areas I'd mention. There are many more though. And obviously GST is another example.
Yeah, in fact, Chris, for a lot of people, GST 2.0 was arguably one of the biggest reforms. So one big bang reform done, RBI cutting rates as well. What else would you want, let's say over the next 12 months from the Indian policymakers?
Yeah, but when you talk to the policymakers in this third term of the Modi government, there's been a lot of talk about addressing what I've heard referred to as regulatory cholesterol, thereby improving the ease of doing business in India. So it's easy to talk like this, but clearly I think the government's extremely focused on this. And that I think is a very healthy focus. And that's something that's can't be done just by pressing a button. But everything I'm hearing makes me think this government's very much focused on this whole issue of ease of doing business, which can only really be implemented at the bottom-up level.
Meanwhile, the Income Tax Department's Mumbai wing has launched survey operations at several Marico offices and factories. This action is reportedly linked to scrutiny over certain foreign funding transactions. Officials are examining documents and questioning senior staff as part of the investigation. Now let's cross over to my colleague Charu for the latest from the ground. Charu, what are your sources telling you about the scale and the progress of this survey?
We have come to know from several sources that the Mumbai Income Tax Wing officials had visited the facility early in the morning at around 10:30 a.m. and there were about 4 to 5 of them. The surveys are still continuing inside the facility and the phone devices and other devices of the staff members have already been taken. In another lighter anecdote, a few of the people outside the offices told NDTV Profit that some staff members had come out for a while to make calls from the phones of other people who are running shops or are usually near the premises of the office. NDTV Profit had also previously reported earlier in the morning that IT wing is conducting surveys on multiple locations related to Marico, including their manufacturing units, major dealers and offices. This is in relation to certain foreign fund transactions related to the company. We'll come back to you with more details when we have them.
Thanks for that, Charu. And moving on, Urban Company made a stellar debut with the stock jumping by a solid 60% from its listing price on day one itself. In an exclusive conversation with the management of Urban Company, including co-founder and CEO Abhiraj Bhal, Varun Khaitan, ED and COO, and Raghav Chandra, ED and CTPO, spoke on the success of its IPO and also elaborated on the plans for growth and the margin picture going forward.
The success of this IPO and the way investors have showed faith is more a promise of the future rather than where the company is today. We recognize that we are still a very small company in the scheme of things, just about break-even last year, less than 1% of the entire home services industry. And, the onus is on us now to work hard, organize this industry, bring standards and quality control for customers, and also help hundreds of thousands of service professionals lead dignified, respectful, middle-class lives, and do it all in a way that it is sustainable, profitable.
After achieving break-even last year, the key is sustenance, and from sustenance it comes to growth. And that's what any investor would look at from a company which is just newly listed. What is that strategy going to look like in terms of sustenance first and then growth?
I think one of the things that we take very seriously is making sure that we disclose to investors very, very transparently and clearly how we are building this company and what is the picture as is. And I think that's something that we will continue to do. Bad news will always travel first to investors. Good news can wait, but bad news will always travel first. And we will try to be as thorough in our disclosures as possible so that investors can make judicious decisions going forward.
Okay, let's talk a bit about the numbers. Varun, I'll come to you on this. You're, of course, EBITDA break even. Do you see that pathway sustainable is the first question. And then what is the margin picture looking like going forward?
I think for the core business in India, we do believe it's already operating at a healthy margin. So if you see the whole of last year, we did about 3% odd as a percentage of net transaction value. And in the first quarter, we did about 4%. And in that quarter, we had not segregated InstaHelp away from the core business, but we did disclose in our RHP that had it not been for InstaHelp, it would have operated at about 5.2% adjusted EBITDA as a percentage of NTV. So it has been seeing a very healthy trend. It was loss-making 2-3 years back. As it has scaled, that operating leverage has transferred into profitability. And I think for the core business in India, given where it is, our goal will be to continue to operate it profitably. FY25, about 77% of the revenue came from India core services, 13% from international, and about 10% from native.
And a proposal on allowing FPIs to trade non-agricultural and non-cash settled commodity derivatives is currently under consultation. That's the word coming in from Tuhin Kanta Pandey, SEBI chairperson. He also spoke about bringing commodity-specific brokers on a common reporting mechanism. Let's listen in.
A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets. By December 2025 end, we will include commodity-specific brokers in the Samohik Prativedan Manch, a common reporting mechanism for compliance reports. This will ease their compliance requirements.
And on to an NDTV Profit exclusive. The government is planning to set up special export entities linked to e-commerce platforms. Now, this initiative aims to help MSMEs focus more on product development, quality and branding by easing their burden of compliance, logistics and customs management. Rishabh now joining in with more on this developing story. Rishabh, what details have you picked up about how these export entities will function and the potential impact on small and medium sellers?
Right, in a major push for e-commerce exports, the government is planning something. The government has something in store, and very fast-paced meetings are taking place with regards to this particular one. The government is planning a big push for e-commerce exports, and this is going to be tied to special export entities that will be set up, and these export entities will be tied to e-commerce companies like Flipkart and Amazon and DHL, etc. Now, what will happen is that these particular export entities, they will handle the compliance part, the customs, and all the boring stuff, while you'll have the MSMEs, who will be the product suppliers to these export entities. They will be focusing purely on branding, product, and quality. Now, what we'll see is that this will be a pilot project. There will be a few small export entities being set up first before there will be a larger rollout. What we're also seeing is the fact that their talks are on with the likes of Amazon, Flipkart, FedEx, DHL, Prudent Groups, as well as the RBI's foreign exchange department. They are also very much involved in these discussions. What we're seeing is that the government is also mulling whether to give these export entities certain GST benefits, certain benefits on par with what other exporters get, such as ROTTEP schemes, certain duty remissions that also come in if you're an exporter, if you're a large enough exporter. What we're also seeing is that there is a plan going ahead to link these export entities with the government's e-commerce export hubs. Those are a part of a separate scheme that was started by the DPIIT. So we're seeing a lot of fast-moving progress take place with respect to the government's plan to push for more e-commerce exports coming out of India, and in turn provide boost for MSMEs.
Now, Rapido, meanwhile, is carefully studying the food delivery market before planning its strategy to make a strong mark. In an exclusive chat with NDTV Profit, Pavan Guntupalli, co-founder of Rapido, emphasized that the company is currently focused on understanding the market fundamentals rather than worrying about competition. As we hear from Rapido on its approach, we'll also bring you insights from Gaurav Kothari, principal investor, India Ecosystem at Prosus, on why investors are keenly watching food delivery giants like Rapido and Swiggy. Let's take a look.
I think the way we approach any industry is first try to get in and understand the nuances, and I think that's exactly the phase we are in our food initiative. The pilot is on. We are trying to understand the nuances. So before talking about things like competition or growth on industry, what we would like to do is we would like to understand the fundamentals of that industry so that would help us to innovate much better. I think we are in that phase.
We have been told by sources out there have been media reports as well about Prosus eyeing Swiggy's 12% stake in Rapido at some $200 million deal. So can you give us more color onto that as to what's going on over there?
I can't talk about any deal per se specifically, but what I can talk about is we feel extremely confident and bullish both about Rapido and Swiggy. Both of them are performing extremely well, and we think they can both of them can create very large outcome in the future.
So given the chance, would you add an investment in Rapido, say?
We, like for all our portfolio companies, we are constantly evaluating if we want to invest more capital or not, and we form a thesis and then make that decision.
And moving on to some national news coming in now, a landslide in Himachal Pradesh triggered by heavy rainfall has killed 3 people so far. The landslide swept debris onto a house in the Niri area, causing flooding at Dharampur's bus stand and carried off several vehicles. 2 people have been rescued so far and the operations are still underway. Let's look at this report sent by NDTV's VD Sharma, who was present on the ground.
हिमाचल प्रदेश में भारी बारिश का कहर जारी है और आज भी हिमाचल प्रदेश के 5 जिलों में मौसम विभाग ने येलो अलर्ट जारी किया है और लगातार भारी बारिश से हिमाचल प्रदेश में जो है तबाही का मंजर है। और मैं इस वक्त शिमला के हिमलैंड में खड़ा हुआ है। पिछले कल आपको बताऊं मैं, ये जो है बहुत बड़ा लैंडस्लाइड हो गया था और यहाँ पर जो है करीब 9 गाड़ियाँ भारी लैंडस्लाइड से दब गई थी और आधा दर्जन के आसपास जो है पेड़ यहाँ पर जो है गिरे थे और अभी भी जो है यहाँ पर मैं आपको बताऊँ रेस्क्यू ऑपरेशन चल रहा है। अगर मैं आपको घटनास्थल का एक तस्वीर दिखाऊं तो ये जो है ये जहाँ से लैंडस्लाइड
And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
Hello and welcome. You're watching Know Your Company on NDTV Profit with me, Samir Arora. Today, the company on KYC that we are going to discuss is Prudent Corp. And in the next half an hour, I'll try to give you the most important information about this company. But firstly, let's try and understand what are we trying to understand on Prudent Corp today in the show. Firstly, if you look at the company had done a recent acquisition of the mutual fund distribution business of the Indus Capital. So what is the rationale behind this acquisition that the company has done? Is the deal EPS accretive, and what are the synergies? We'll try to get an answer for all that questions. Also, the company had recently achieved all the earlier given targets. So what is the next
growth target that the company has internally set for itself is something that we would want to know from the management. Apart from that, what are the key levers that could lead to operating margin improvement going forward for Prudent Corp, and what is the anticipated growth when it comes to the insurance segment, which is the newly started segment of the company. So what is the kind of growth that they are anticipating from this segment going forward is also something that we would want to know, and how Prudent as a company is trying to mitigate the key risks that are present in the company. Firstly, when it comes to reduction of commissions, and the second key risk that comes on board for Prudent Corp at this moment is the fact that there's a big competition that is coming in from fintech. So how is the company mitigating this key risk is also something that we would want to know from Prudent Corp. But firstly, let's understand what does this company do. Now, this company was incorporated back in 2003. It provides wealth management services to retail investors. Now, Prudent is amongst the top few non-bank mutual fund distributors in terms of average AUM and commission that they have received. Now, as of June 2025, if you look at the company's average mutual fund AUM was close to 1.2 lakh crore rupees, with 96.7% of this coming from the equity-oriented schemes. Now, over the years, if you look at, along with growing its mutual fund distribution platform, Prudent has also forayed into the life and general insurance solutions, stock broking services, SIP with insurance, gold accumulation plans, asset allocation, and trading platforms. So the company has tried to diversify its revenue sources as well. However, in the mutual fund business, if you look at, it has an open-ended source distribution of mutual fund products, where it distributes mutual funds of asset management companies irrespective of their affiliations or size, thus providing their clients a large spectrum to choose. Apart from that, in the insurance segment, it includes distribution of life insurance, which has term, par, non-par, annuity plans as well. And when it comes to general insurance business, it includes primarily health insurance business that the company sells. When it comes to stock broking services, it provides these services to retail customers to trade in equities, derivatives, and currencies. And when it comes to other financial products, it also provides PMS, AIF, P2P products, bonds, fixed deposits, small case, unlisted securities, and multi-other loan against securities as well, and sovereign gold bonds as well. So a very big portfolio that the company has. Now, if you look at the revenue model of the company, it's quite simple. It's commission based. The company earns recurring revenue from commissions that it earns on selling various products, and non-recurring revenue from brokerages as well. Now, as I was talking about the revenue mix, it has tried to diversify it, but 83% of the company's revenue still comes from mutual fund products. Insurance product, which is a newly started business in FY25, contributed around 12% to the top line. Stock broking, again a very small contribution coming in, just at 3% odd, and then the various other segments that we discussed, those segments contribute close to 2% odd to the company's top line. So that's all that we have about the company. Now, if you look at the key parameters on which we are going to rate Prudent Corp today, firstly, it's the income statement. The second one is the balance sheet that we are going to see for Prudent Corp. Now, how good the balance sheet is something that we are going to discuss here on the show. And then apart from that, we are going to also look at cash flows, return ratios, shareholding, how the share price performance has been so far from listing, and valuations, how to stand up at this current share prices, and what is the 12-month forward valuations as well. And lastly, we're also going to see how analysts are currently valuing Prudent Corp at the current juncture. So firstly, to start off with the income statement. If you look at the income statement, the company's revenue over the period, that is over FY22 to FY25, has grown at a compounded annual growth rate of 35%. EBITDA, similar growth of around 32% odd. Net profit, again a 35% growth rate, a quite stable growth that we have seen coming in from the company's financials. Now, if you look at the Q1 financial performance of Prudent Corp, the revenues on a sequential basis were higher 4%, but on a YOY basis, it was up 18%. EBITDA increased by 14%, while the net profit jump was around 17% on a YOY basis. So a steady growth that we have been seeing that has come in from Prudent Corp so far. A 30% plus CAGR growth over the last 3 financial year, which is quite strong, and hence we are giving it a thumbs up at this moment. Even if you look at the margin trajectory over FY25 compared to FY24, if you look at the margins, it has increased to around 24.7%, but FY24 numbers had some kind of one-off, and that's the reason we had seen this kind of a depressed margin. But overall, the margins have remained quite stable at around the 25-24% band for Prudent Corp. Now, if you look at the balance sheet of Prudent Corp at this moment, it is a net cash balance sheet, which in itself is a plus point coming in for the company. The book value stands at around 6,680 crore rupees, and if you look at the mutual fund AUM, it has continuously grown over FY23 to FY25. The mutual fund AUM has grown from 56,189 to 1,03,515 crore rupees, which is a quite strong growth that we have seen. And as again I mentioned earlier, it is a net cash balance sheet that Prudent Corp currently has. In fact, they have as of Q1 they had cash of more than 500 crore rupees. So that's also a thumbs up coming in for Prudent Corp on the cash on the balance sheet side. Now, if you look at the cash flow from operations over FY23 to FY25 has increased from 127 crore to 161 crore. EBITDA has seen a jump of 173 to 262, which means that the cash flow from operations to EBITDA continues to remain above the 60% mark, which is very crucial for any company. And this clearly means that whatever income that the company is generating is largely cash. Nearly 60% of the EBITDA that the company generates is cash and is coming into the company's balance sheet. Again, cash flow is a thumbs up at this moment. For return ratios, the return on equity has been continuously increasing. In FY21, the company's return on equity stood at close to 28.7%, which has now increased to 34%. So a steady rise in the company's equity, given the fact that the company's earnings have been increasing. So again, a thumbs up coming in on that front. Now, if you look at the shareholding pattern here, the company's promoter holding from March 2023, yes, the promoter holding has come down from 58.4% to 55.3%, but it is not much of a dilution that we are seeing. Also, given the fact that FIs and DIs have taken a strong interest in the company. In fact, FI holding has increased from 1.2% to 17.5%, while the DI holding has increased from 9.8% to 20.8%. Domestic institution investor interest has nearly doubled when it comes to Prudent Corp, while if you look at the investor interest of foreign investors, it has quadrupled over the last 3 years. So strong FI and DI interest that we are seeing when it comes to Prudent Corp, and hence a thumbs up coming in for Prudent Corp as well on this front as well. Now, if you look at the share price performance, in the last 1 month, the share prices are up 5%, 6 month 48% return, YTD returns of around 10 odd %, and since listing, the share prices have increased nearly 430%. Again, a thumbs up on that front. However, if you look at the valuations, the 12-month forward valuation for Prudent Corp stands at around 47.7 times. This is a bit expensive when you compare with his other peers like Nuvama Wealth and 361, which are trading anywhere between 20 to 30 times. So largely on the valuation front, it's a thumbs down, given the fact that valuations are quite expensive at around 48 times. That is the 12-month forward valuation we are talking about. And lastly, when you look at the analyst recommendation, there are 3 buy ratings on the counter, 3 hold ratings, and the return potential over the next 12 months is largely flat, which means that the valuations are at full as per analysts. So hence we are giving it a neutral rating at this moment, given the fact that as per the consensus target price that has been set by around 6 analysts, the upside potential is quite limited when it comes to Prudent Corp. So to sum it up, if you look at income statement is a thumbs up, balance sheet is a thumbs up, cash flow is a thumbs up, that's 3 points, return ratio thumbs up 4 points, shareholding thumbs up 5 points, street cred again a thumbs up 6 points, valuations are thumbs down, and analyst recommendation is neutral, which means that the total rating for Prudent Corp comes at around 6.5 out of 8. Now let's go across to the management, the chairman and managing director of Prudent Corp, Mr. Sanjay Shah. Well, sir, thank you for giving us time. Firstly, to start off with, can you explain to us what is the rationale behind this recent acquisition that the company has done?
So, I think the acquisition of Indus Capital has been a very perfect fit for what we were looking for. So if I'll tell you, Indus is a company which has been there in the mutual fund distribution business for almost about more than 22 years, and they have roughly about 2,050 crore of mutual fund distribution AUM, which has been serviced to 3,500 families. So the average AUM per family would be roughly about 60 crore, 60 lakhs. So I think it's a very good fit for us, because Prudent is also a pure mutual fund distribution play, and ours is 95% equity in 120,000 crore of AUM. In that case also, it's a 95% of equity AUM. So it was a good fit for us. As you are aware that Prudent is a very strong player in B2B space. However, Prudent started as a B2C. So today, if I am telling you I have 1,20,000 crore of AUM, roughly 10,000 crore of AUM we have from B2C, and we got something which is very quality in the B2C space. So we align the interest with the management of Indus.
Well, if you look at Indus Capital's AUM, it is grown at, it's around 2% of your quarterly average AUM. But the profit before tax margin, that stands at around 70% as against 24% of Prudent Corp. So incrementally, what will this do to, what will this acquisition do to your business? What about your margins and profitability going forward? And with this acquisition, will you also have access to newer geographies, customers?
You are very true. So if you look at the currently Prudent is into a B2B business, and B2B is a business wherein you deal with all the independent, highly motivated, qualified mutual fund distributors, and there it's a pure variable business, and whatever you earn, almost 67 to 70% kind of revenue share with them, and your margin is roughly about 30%. While this is a B2C business wherein you will have the real estate managers who will be managing the customer's portfolio, and because they are your employees, you will be having the fixed plus variable remuneration payable to them, and then the payout normally is reasonably lower. Definitely Indus has a very good payout for their existing real estate manager. So there you have a very high margin. So you are very right. If you have a top line of 100 rupees in B2C, your margin would be about 70%. If you are into B2B, if you earn 100 rupees, your margin will be 30%. So I think it's a complementary business to each other. Coming to the my capability to work on their customer base, so Indus is a pure mutual fund distribution play, and they have established themselves as a strong player on the mutual fund distribution side. While Prudent is also dealing in the many other retail product like insurance, PMS, AIF, NPS, fixed deposits, even broking also. So we believe that we will be able to provide the additional services to Indus customers. So cross selling is going to be a very strong opportunity for us.
Right, sir. So with this acquisition, what is the kind of debt, employees, etc. that you will be taking as a part of this deal? And how long do you think the integration process between both these companies could take?
So we are acquiring it as a going concern. So whatever is the existing setup which they have in Pune, so they have the office, manpower, rented premises. So everything as it is, including entire manpower, will be on the books of Prudent. So I think we are acquiring as a going concern. From the point of view of their client, from the point of view of their real estate managers, there is no change as far as processes, approaches, and the activities are concerned. As if nothing has happened. Only thing is that the name will change from Indus to probably Prudent and Indus together. As far as the process is concerned, typically we have signed the term sheet with them, and the MFI process is roughly about 15 to 20 days, wherein the letter has to go to all the customers saying that this process is happening and their negative consent is required by them. If they do not agree, then they have to say that no, I'm not agreeing with this merger. So my belief is that by end of this month, entire Indus AUM should be in the code of Prudent by 30th September.
Right, sir. Now, if you look at this acquisition, this is entirely funded by cash, given the fact that you have a cash balance of more than 500 crore, right?
Yeah, absolutely, because Prudent is sitting on roughly about 600 crore of cash, and current payout which we'll have is roughly about 85 crore, and this entire 600 crore is sitting on a liquid book. So yeah, we do not require any kind of money to be borrowed. Another thing is, when we are acquiring Indus also as a going concern, they do not have any kind of liability or debt or so it's a very clean business which we are acquiring without any liability or contingent liability.
Given that you will be left with a strong cash on the books, even post this acquisition, any more acquisitions that you're looking at?
Yeah, so I think with this acquisition, actually we wanted to give a very strong message to entire India's mutual fund distribution community that if you have built a very strong long-term assets which is managed by a very strong team, and you have somebody who is managing entire show from the front, then we are definitely ready to align the interests with them, because we will be ready to absorb them. And I can tell you, in case of Indus, because they have almost 15 to 17 very loyal real estate managers team, which is headed by a very strong industry veteran called Mr. Gaurav, who is handling this business. So it was a very good business where we can acquire and the business can also continue as it is. So if that kind of thing is available, we are sitting on cash and we are regularly exploring these opportunities. So we are definitely open.
Right. Now this acquisition, if you look at, it's coming at around 10 times price to earnings, while Prudent trades at more than 47 times valuation. So this acquisition is happening at a much lower valuations. Why? And is this deal EPS accretive also?
If you look at us, independent mutual fund distributors who doesn't have the business continuity in place and it is not supported by a big institution, I think what we offered as a PE multiple is a very reasonable PE multiple. It's not very high, it's not very low, and at the same price, deals are already happening in the market. May not be very large because ours is the largest all cash deal. Plus, Prudent is offering everything in form of cash. You might have seen some of the deals where it will be an equity swap of one company to another company. Well, it's a pure cash. So my belief is that it's a very reasonably priced deal for us also, for them also.
Right, sir. Now, if you look at earlier, you had aspired to achieve an SIP book of around 1,000 odd crore rupees. Now, you have already crossed that threshold. So, what's the next target internally that Prudent Corp has set for itself?
Yeah, so fortunately, we already crossed the 1,000 crore of SIP book in the month of June. And when I'm talking to you currently, we are at 1,062 crore. So that's a landmark achievement for us. And we celebrated very, very strongly this number because this 1,062 crore of SIP book we have 35 lakh live SIPs. And I can tell you about the Prudent's market share in the SIP book. We are 3.7% in the total SIP book. And if you take out the direct piece, then Prudent is roughly about 6% in the SIP. So it's a very strong contribution to the industry and we are very happy that we are participating into the India's retail financialization story.
Right, sir. And any internal targets that you have set for your on the market share front? Where do you see a market share to be, say, 3 years down the line?
Market share at in the regular piece about 5.6%, and gradually we want to take it towards 6%. However, internally we believe that today we have 1,060 crore. By March we should reach to a 1,200 crore of SIP, and in next 3 to 4 years time, rather 3 years from this year end, we should reach to a 2,500 crore. So that's the internally we feel that 2,500 crore is something which is achievable in 3 years post March.
Right, sir. When you look at the operating margins, it was a bit under pressure in the first quarter. But what is the outlook here, and do you see any levers for operating margins going forward?
So I think the operating margin, if you look at Prudent, as I think I explained you that Prudent is purely into a B2B space, and Prudent started the business in the B2C. So what has happened is that last 1 year, 1.5 years, our share of B2B, which is the partner-driven business, has gone up by almost about 200 basis points to 250 basis points. And as I told you, if 100 basis point incremental share comes from the B2B, my payout ratio to them would increase by 67 basis points. So there will be so that is the reason I think probably you will have seen that some amount of pressure came on operating margin side. Second, because of the competition, if you look at in the B2B space, there used to be only 2 players. However, in last couple of years, we have seen a lot of players entered into this segment. So we had some amount of cost pressure till last year, and that's the reason my employee cost has also gone up in the range of 18 to 20% in last 2 years. But probably my belief is that from the beginning of this year, we have been seeing that pressure is receding. And another important thing I can just wanted to communicate that we just got the approval for ESOP plan from exchanges, and in the next quarter, we will roll out the ESOP also, which is not a part of cost now. So probably next year, you might have one additional cost element of ESOP. But then after, we are very fairly under the assumption that operating margins should stabilize, rather start improving from here on.
Right. And I clearly understand that insurance business is a newly started segment and it contributes around 10% to the top line. But the growth has been quite high on this counter. So how sustainable is this, and what is the kind of incremental contribution that you're expecting from insurance segment to come in going forward?
So I think we believe insurance is also like mutual fund where the penetration is very, very low. If you specifically look at the health insurance, we believe there is huge scope for expansion or the growth in this industry. If you look at Prudent, we are basically a mutual fund distribution house, and what we are doing is that we have 34,000 mutual fund distributors who work with us, and we try to convert them as a point of sales to distribute and advise the insurance product also. Out of 34,000, we could be able to convert almost about 12 to 13,000 people as a point of sales. But we believe that insurance is a huge growth ahead for us, and we are purely focusing, as far as your general is concerned, into our retail health. I'll just give you the numbers. March 23, my retail health book was about 100 crore. Currently, we are at 160 crore, and in next 1.5 years, we are targeting that 160 crore should go to us.
Right. The biggest risk that analysts usually point out is the AMCs, given the fact that AMCs could cut commissions going forward. Any risk on that front that you could see going forward that could happen, which will keep your yields under pressure?
So if you look at, I think the entire industry has moved to a new TER structure in 2019. And then after, because of a huge mark-to-market and the huge growth in the AUM, from last year, we have started seeing the repricing of current AUM by the couple of AMCs. If I give you the number perspective, let's take an example that in the first quarter, Prudent's AUM revenue was 300 crore. And if I can tell you that the projected impact of all the changes which are started by HDFC, then for example, Kotak, SBI or the Motilal, everybody, a lot of people has done the repricing of assets in their either all schemes or a couple of equity schemes. The cumulative impact is not going to be more than 15-17 crores. So it's hardly about 1.5 basis point. That is what the impact is. However, we understand that as you see more and more growth in the AUM at particular scheme level, some amount of pressure.
Right, sir. And when it comes to fintech, that is the another key risk that is there for the company. So how is Prudent Corp trying to mitigate the same?
I think my belief is that fintech is probably helping to expand the market. Is probably why fintech has grown. I believe only significant reason the growth of fintech was the mutual fund distribution community is very, very less. Today, our country has 175,000 people who are working as a mutual fund distribution. So fleet on street is very, very less, and there was a huge gap, huge vacuum for people to invest. And I think that gap has been capitalized by the fintech player. However, the business model of fintech and the mutual fund distributors both are different. For fintech, they acquire the customer of a mutual fund through their acquisition route, and then they start offering them either the broking product or the NBFC.